Please rise. Jerry, are we all set? You're rolling. Good evening, everyone. Welcome to a special meeting of the Board of Finance. We're going to hold the meeting first on one item, a bond resolution item, and then we'll go into our public session related to the 2017 budget. I'm going to ask Mr. Mottola to lead us in the pledge this evening.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
All right, thanks, everybody. My apologies. We had to post this meeting as a 7:25 start, and we have one item to cover in this special session, and that item is a bond resolution entitled Resolution Authorizing Appropriations of $30 million to refund certain of the town's outstanding bonds and authorizing the issuance of refunding bonds to finance such appropriations. Be and hereby is approved. So there's a little background on this item. This item does not technically need to come before us. This item could go directly to the RTM because it is basically a refinancing of bonds that are already issued and outstanding. However, the RTM, and I want to thank them for this, thought it would be prudent to have our board make a decision on this. So this has already been voted on and approved by the RTM, but that approval is contingent upon our board's approval. Should our board approve this, Mr. Mayor and the team will go out to the public markets, and they've estimated that they'll save the taxpayers over $1.3 million by refinancing this $30 million in bonds. Before I turn it over to Mr. Mayor to walk us through the analysis, does anybody have any questions, comments, concerns on this item? Seeing none, Mrs. Leclerc, please.
Does the $1.3 million in savings include any expenses related to the refunding?
It excludes, it's savings.
Well, no, it
Well,
doesn't.
no,
Is it covered?
Does it cover any of the expenses, like all the expenses? It's a net number?
It's a net number.
Okay, thank you.
Thank you. So that would mean it includes.
All right, since we have 30 minutes before I have to be at another, 30 seconds before I have to be at another meeting, I'm going to go quickly. What you have before you as a handout is 3 pieces of paper. The top page is has 4 columns, fiscal year end, the total payments that would be due based upon the waterfall that was completed after the last capital planning meeting, which was produced in last date in January, versus the one that was produced today, actually, with the relieving it of the debt that's going to be refied and adding in the debt payments that will result from the refi action. Now, you notice that there's a difference showing there of $1,003,009, last number on the right bottom. And you see that the biggest portion of that number is $1,254,000, which shows in fiscal year 2018. That would be the intent of the administration at this point, is to give guidance to advisors and to the bondholders, the bond purchasers, excuse me, that with respect to the savings, we'd like it all to be front-loaded. And the reason for that is, if you go to the next 2 documents, you see that the first document, which is called pre-refi, if you go to the far right column, fiscal year 18, you see that the number is, you got the fiscal year 18, go to the left, you see the annual change. That's the change from the prior year. You see that without anything else happening, steady state environment, the change from the 17 budget to the 15 budget for the debt service line would be $3,191,000. All right, so that's the second column to the left from the right-hand side of the paper, the 1, 2, 3, 4th number down. So by loading the 1.3 million into that year, which actually is the next budget year after this one, you see the 3.1 changes to 1.9. So that's the intent, and that's what the effort will be, and that's where we stand at this moment.
Thank you, Mr. Mayor. Quick question for you. Explain the mechanism for how do you load all that savings in 1 year? Is that a reduction in the principal you're paying? What's going on there?
Yes. Basically, when we go out, we let our advisor know that this is what we would like. The advisor works with the purchasers, the banks, and sometimes you can get it and sometimes you can't, but that'd be our intent.
Now, is that, what you're attempting to do is give a greater smoothing to our debt service over the course of a number of years? Is that?
Well, what I'm trying, as you know, as we spoke a little bit, maybe not in this body, excuse me, my body's mixed up, but we are doing, we're evaluating the whole bond payment structure and policies and procedures of the town. Currently, when the town produces a ban, issues a ban, which it does every year,
Yeah.
the current policy has been for, I don't know how long, has been that you would pay that ban back, and it's 0 in the year of the issue, and then 0 for 2 more years, then 5%, 5%, and then 90%. What that does is, if you have a ban 1 year of $1 million, then you have a ban the next year, which is generally the amount of, of $5 million, then you would have a 90% of the difference, $4 million times 90%, is you have a $3.6 million difference in the final year, the next year of payment. So, A, that's not a decent or reasonable thing to do from a tax planning perspective. It doesn't, it makes erratic, fluctuating taxes and mill rates. B, it doesn't tie the payments back to the life of the assets. So we are looking at that as one of the mechanisms to smooth out the payments. The other thing we're doing is looking to maybe bond every year, given that you have to go to the rating agencies every year now, which you didn't used to have to do, but you have to go to the rating agency now for the bans. The expense would be almost the same as a ban, to bond as to ban. So the expense differential would be nil, but the smoothing impact would be significant.
So is the next item out there is in 621, you have a $4.7 million pop in debt expense. Is that the next? In other words, you're trying, I know what you're trying to do in the bans, but I'm saying globally, you're trying to smooth the annual impact of the debt service. Is
Correct
that a correct
statement. And then the significant impact on the volatility is the debt payment. If you go to the left-hand side, if you go over 1, 2, 3, 4, 5, 6, the 6th column from the left-hand side, you see the ban paydown
Yeah.
column. And you can see how that goes from 4 million to 3 million to 300,000 to 400,000 to 2 million to 1 million to 3 million to 6 million to 4 million to 4 million. The reason it smooths out in the end is because, it's got a consistent, that's just a plug number from one perspective, because we don't know really what we're going to be banning in those years. So that's just kind of like an estimate that's thrown in there to put the waterfall together for future years, based upon an average. So it's the same every year. It's not actual, but when you see the first 10 lines, which are based upon actual, given what's in the waterfall, because the waterfall goes out 10 years, as you all know, you can see the fluctuating difference in the band payments, and that's one of the things we're trying to adjust.
Do we have any questions for Mr. Mayor on this item, please? Anyone? We understand what is trying to be accomplished here in the smoothing of the debt service over the next 30 years. Mr. Mayor, when are we going to get a presentation on what you want to do with the bans? Is that forthcoming after the budget cycle?
I'm trying to remember if I issued I think all of you have a one-pager that I sent out.
I don't know whether you issued it broadly or not, but we should make sure that gets out there, and then we should have a discussion
Right,
on it
after the budget session.
Right, maybe in the quarterly.
Yeah, good idea.
Okay. Any other questions, comments, concerns? Seeing none, I'm going to ask for a motion to put this before us. Let me read it one more time. And then we can put this before us. Resolved that the bond resolution entitled Resolution Authorizing Appropriations of $30 million to refund certain of the town's outstanding bonds and authorizing the issuance of refunding bonds to finance such appropriation be and hereby is approved. Do I have a motion on that? I'm going to go to Mr. DeWitt. Second, Mr. Hofkes. All in favor of this item? Opposed? Abstention? That item carries. And we are done. May I have a motion to adjourn that special meeting? Mr. DeWitt, second. I'm going to go to Mr. Stone. All in favor of adjournment of that meeting? Those opposed? Abstentions? We are adjourned from that meeting, and we're going to turn right over into our budget meeting, which includes the Board of Selectmen. Everyone, please rise. I'm going to ask Mrs. Gardner to lead us in the Pledge of Allegiance this evening.
I pledge
Allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, welcome back, everybody. The items on our agenda tonight for review are the Purchasing Department, the Administrative Services Department, Finance, Fund Balance, Assessors, the Board of Finance, always a hot topic, the Debt Service, and then under Culture and Recreation, the Park and Recreation Department, Penfield Pavilion, the Waterfront and the Marina, and both golf courses, the Carl Dickman Golf Course and Smith Richardson. This evening, Mr. Lombardo is with us, and others. Thank you for being here. Mr. Ross is here as well. Before I get started on the going department by department, any questions or comments from board members? Once again, we'd like to welcome the Board of Selectmen. I know Mr. Timniak had an engagement that said was just going to keep him detained a little bit, but he will be here. So he wanted to make sure I noted that. We're going to start with budget number 3030, the Purchasing Department. That would be on page number 185. And Mr. Mayor, I think you're covering that since we don't have a purchasing director at present. Is that correct?
No, but we do have two very capable buyers. I'd like to introduce Phil Ryan and Corinne Dyer. Ask them to come up to the, I guess, the witness table, for lack of a better term. And
Welcome. Good evening.
Thank you. Good evening.
Thanks for coming here.
and
Promise
they-
not to beat you up too much.
Thank you.
And I think they have a decent handle on this, and will take us through it.
Great. Do you have any prepared remarks you'd like to make before we turn over for questions or anything?
No, we're new to this, so do you just want us to go through line by line, or?
You definitely don't need to. If there's any specific differences from year over year that you'd like to point out, other than the fact that we don't have a purchasing director right now, feel free to point them out. Otherwise, we can turn it right over to the board members for questions.
Well, we went through them. Obviously, we met with Mr. Tetro earlier this month, and there is a 40% decrease on office supplies in the purchasing department. We went through that, and the main reason for the decrease is we just don't spend that money, so we just did a good audit of that. What did we have? A 20% increase on advertising. The major reason for that is we have a lot of bids in the pipeline, STEEP grants and CDBG, Community Development Block
Yep.
grants, and our small town economic assistance programs, and also the human rights.
Oh, there's a CHRO set aside that was set in place.
CHRO.
It was set in place July 1st, 2015, and it requires us to place advertisements for the set aside program for any state bid that is over the threshold of $50,000, whether it's funded in part or in whole by state money. So that will greatly affect our advertising.
Really? And where do you advertise?
Norwalk Hour.
Okay.
Yeah, we used to use the Connecticut Post. We do get quotes from time to time. Norwalk Hour has good coverage, and it's a lot less expensive.
Got it.
And when we can get away with it, excuse me, we use the Fairfield Minuteman because that's, again, much cheaper. But it depends on, some of these grants require like a large circulating newspaper, and of course the Fairfield Citizen or Fairfield Minuteman
Do
are
not
only
qualify.
small. So
Okay. I'm going to turn it over, thank you. I'm going to turn it over to board members for questions. Mr. Becker?
So that's a state item. I mean, that's not like a federal requirement usually. I mean, that's something that's basically a state law that says you must advertise in this way if state money touches it, essentially.
Yes, correct,
Correct.
yeah. I have a food services bid out right now for the Board of Education, and I had to put an advertisement in the newspaper for that, just for one day, and that was $85. So some of these steep grants there's a lot of language that we have to put in, and they can be $400, $500. I think we've had $1,000.
Yes, we recently just bid out the Burr Mansion renovation, and that required 2 consecutive days with certain language. The total was $418 just for those 2 days. So they add up quickly.
Yeah.
When we're doing town items, we're not, I mean, that doesn't touch the state money under this requirement. We just put that on our website, right?
Correct.
Yeah.
Do you know of any discussions with state legislation or something to sort of adjust that? I mean, because these costs are, the newspapers their relevancy is decreasing. If somebody wants to do a town project, I assume that their first stop is just to show up on the website and do that. Do you know of anything at this point to try
I know
to
they're
alleviate
reviewing,
this?
I know they're reviewing the CHRO legislation now. It is brand new, so they're still
Okay.
like weeding out certain items. But as far as the steep grants go, I think that has been in place for years now.
Okay.
Yeah, and if I might, the expansion that has been mentioned and that we're talking about was put into the recent budget passage, so the state legislature seems to be going in the opposite direction from what you were suggesting.
Yeah, not a good thing. Disappointing in these times. Not our doing, obviously, but I have to assume there's a lot of municipalities that are forking over a ton of money for a bunch of people to not read an ad. But obviously, if we have to pay it, I get it being in there. So.
Thank you, Mr. Becker. Mr. DeWitt, you had your hand up.
Just as a note, when we rewrote the purchasing procedures, we took this requirement for Fairfield out of the procedure. We used to have to quote, if you've been here long enough, everything.
Yeah.
You're going to go buy a tree, and you're going to get it from Ganem's, you'd have to put it in the Fairfield Citizen. So we've actually this number has been reduced quite a bit after the procedures.
Yeah.
So it's just a state we're dealing with now.
Yeah, I did point out to the state, we have a weekly ad in the Fairfield Minuteman for this food services in particular, and they still made me put that ad in. And I pointed out it's on our website, it's on the DAS website, and they also gave us a list of pre-approved contractors. And I had to email those contractors, which I did, and I pointed that out, and they still made me spend $85. So that's what you have to argue against, is that rationale.
And
so-
we wonder why we're in so much trouble, right?
Yeah.
Yep.
And the federal government has gone away from that, too. Federal government's almost all, internet now.
So just for definitional purposes, when you talk about things like unfunded state mandates, this would fall into that category.
And then what page is finding out?
Yep. Okay. Let's go to any other questions we have on this. I do have, go ahead, Mr. Brown.
Just a question on where we are at with the hiring of a purchasing director. Mr. Mayor?
Mr. Mayor, Purchasing Director.
We have advertised, we have received resumes, we have interviewed, we have narrowed the field, we have held some background checks, and we have, and we're in talking to a few people.
Do we have an anticipated date?
We have hoped for dates,
Okay.
but that would depend upon, the final candidate and his or her request for how much time they need to leave their current positions. So probably the earliest is April 1st. Could go on.
Mr. Brown?
Is this a position that would, as far as benefits go and the pension goes, or would this position be entering the 401A?
401A.
Okay.
It's one of the issues in the interviews and in the negotiations.
Okay.
Thank you, Mr. Brown. Another comment on the budget. In looking at it, for the purchasing director, you have the salary going up this year. That's due to the 2016 salary increase, correct? So what we've done within the department budget is we've budgeted for the retired purchasing director's full complement of salary and benefits. Correct? Okay. Any other questions? Seeing none. Oh, I'm sorry, Mr. Beck, I missed you. My apologies. Thank you.
No, no problem. So it's come up a couple of times now. I think, you know, the other night it came up about the hiring of the department heads and the 401 and the pension, and, you know, to some extent, I get it, but you know, so be it if it's a problem. If people want to come here and work for a whole pool of new employees that are coming in, and you know, we're not other than police and fire, we're not offering it to anybody who's going to be in these departments. So I mean, it's going to take time probably to flush it out on all ends, but this is the new way, and you know, I understand that there's an angle where we may end up, you had mentioned perhaps like having to pay them more or something, you know, in the salary package. So on that end, what are we talking about? How do you manage that within this budget? You know, you have allotted here 113. How do you handle that? I mean, if you want to go to 120.
Well, if you remember from the
I
other
think-
night at the...
Yeah,
If I
just
could,
wanna understand.
Mr. Mayor, if I could. I think, one, we don't necessarily want to get into discussing negotiation for a salary range in a public meeting on Fair TV.
I'm asking
However-
procedurally how.
Yep. However, we're basically put in the current salary for the purchasing director. We put another amount in contingency, so that we have some flexibility in the budget being proposed to make adjustments as needed.
But you make the call essentially as the first selectman when you enter those terms. There's no going to the RTM with a contract or
Correct.
going, you know, or coming to our board or anything essentially like that. That's
is-
my question.
that is correct.
I don't want to get into, I understand, not getting into the dollar figures, I get that. But essentially, it's, you make it, that's it, and at that point, they're hired. So if we
Correct.
said, oh, we don't like it, they're hired at that point.
Correct.
Okay,
It's similar to how the Board of Ed works in that regard when they hire people.
okay. Thank you.
All right. Any other questions? Seeing none, this time I'm not going to fake us out. We are going to Administrative Services, which is on page 86.
And that will be covered by Ms. Dyer and Mr. Ryan as well.
Great. All right. Page 86 is the write-up. Page 87 are the numbers. And there is, I guess, one capital. No, there are no capital items on this. Okay. Page 87. So go right ahead, please.
We had a major deduction on the maintenance and repair of equipment. That's for we have 4 copy machines, 3 in Sullivan Independence Hall, 1 in Old Town Hall. It's essentially for maintenance on that leased equipment. If like a stapling device breaks on the thing, or for toner cartridge replacement, or any other parts that break on those things, we just don't use that much money. We did an audit on that, so we reduced it.
The other thing is special departmental supplies is down $1,300.
Yes, sir. That's mainly our administrative copier paper. And when we entered into our new lease agreements, we chose to go with scanners. So there's a lot less printing going on in Town Hall, so that saved a lot there.
Fantastic. Thank you.
You're welcome.
Do we have any other questions, comments from board members? Mr. Hofkes.
Hi, could you just outline for me what is involved in the fees and professional services? Just break that down a little bit more. What's in
Yes,
there?
sir. That is for our mail delivery and courier services. Mainly, we have one full-time outside employee that handles all of our inner office and outer office. He will collect all the mail throughout the town, police department, fire, Board of Ed. He will sort it, and then we have another company come pick it up, process it, postage it, and mail it through U.S. mail.
We negotiated that contract to for them to hold pricing for this fiscal year.
Correct.
Which they were good to go, so.
It
we
would
have a-
normally go up for cost of living increase,
Yeah.
but they chose to keep it the same for us this year.
Okay, thank you.
You're welcome.
Any other questions? Seeing none, I'm going to move this along as well, and we're going to go to the Finance Department, which is page 181. I'd like to thank you two for both being here.
Oh,
Thank
you
you.
very
Thank you
much.
for your service to the town, and have a good night.
You too, thank
you.
you.
Page 181.
All right, on page 181, not a lot of exciting activity going on there. As far as percent changes, there's seasonal payroll change is up 66%. That's the special school needs program, and the student who has been in that position is graduated, but he's still in the program, and when they graduate, they get a salary increase. Longevity bonus is down 27%. That's because we had one of our long-term employees transfer out, so it's replaced by a new employee.
Why is
That's,
the printing and binding, Bob?
printing and binding is, where's printing and binding? That's checks, payroll, accounts payable checks, budget books. That, it's kind of like a 3-year average kind of number, more or less. Like, it doesn't look like we're going to spend the 10,000. We spent the 10,000 last year, but that was just a department consensus. I don't know if there's any specific. We reduced the number of budget books, which are like, it's $20 a piece approximately.
$20 a piece?
Yeah,
for budget
16,
books?
something like that, yeah. 1676, 1776.
And Mr. Walsh, did you have a question?
Yes. On your regular payroll, and your list on the next page, on page 120, 183, on the last position for a full-time employee, basically, it says support help new projects, 62,008.
Yeah, I have no idea why it says 00. Actually, that is not actually a position.
Why is it listed as a position?
Well, it's stated as new projects, but it's listed in that column, and that's the line it's under. That is a combination of, could be interns, it could be temporary help, it could be consulting help, which the department would use to work on and complete certain functions and projects that are underway. If you all probably recall that last year we requested a full-time person. That person was approved by the Board of Finance. It was cut by the RTM. The RTM cannot add, so the RTM could not cut the position as a position and then add it as professional fees. So they cut the position in half, and we've carried it that way.
Well, it appears to me that what should have been done was they should have had an up or down vote on that position, because they couldn't do what they wanted to do. Because what you wanted to do was to, or I think what was the intention of this, was to use it for fees and professional services. But it never got moved to fees and professional services. It stayed as a full-time position in the budget. Correct?
Yeah, they cut the full-time position, that's a correct statement, and we are utilizing the funds based upon the intent of the RTM.
But was not the intent of, I mean, it seems to be, what I don't like about it is it's a backdoor way of getting around our charter, because we budget for budget lines. And we budgeted on that budget line for a payroll position, a full-time person, regardless of how it was cut, that they have the right to cut it, to do whatever they want. So what they're not allowed to do, though, is that you're correct. They could not, you wanted to use the money in fees and professional services, correct?
Well, initially, we wanted a position. That's what we asked for. That's what the Board of Finance approved, correct?
Yep, and the Board of Selectmen approved, and that's what the first selectman requested in his budget. But they didn't want to do that. So to me, they had their ability was to have an up or down vote on that position, or to reduce the salary position for that position. You can't do both. You can't say, I plan on using it for fees and professional services, but I'm going to leave the money in the payroll line, and wink, wink, we're going to spend fees and professional services out of a payroll line. You can't have it both ways.
Yeah, no, perhaps the,
And now it's here again. That last year was confusion.
Yep.
Now we're doing it again.
We should have moved it, I agree.
and I think
We're
that
happy
was,
to do that
was gonna be
now.
my point, that procedurally, last summer, after that was done, it should have come back before this board to make an adjustment in the budget and move it from one line to another.
Or at least we
I
would have had the
think-
chance to not do it.
Well, I think, if I could,
Go ahead.
I think that it was clear from the intent and all the discussion around in terms of what was going on, what we would have been better from a process standpoint is to come back before this board and say, here was the clear intent of what the RTM did, here's what had this board had approved, here's the compromise, and we should move this dollars to the either fees and professional service or wherever we'd put an independent contractor line, either part-time, whatever that would make it a little bit clearer in this year's budget.
I don't think you could have done that. I understand what you're saying, Mr. Tetra. To Mr. Walsh's point, though, I don't think they could have done that without an appeal.
No, they couldn't.
Tom?
We could come to you in July.
It was done
No,
in the approved budget.
No, I guess what I'm saying is,
It's online.
forgive me, and I understand exactly where you're going, but to Mr. Walsh's point just about the charter, they had a very clear decision to make as to whether to cut the position or not. To cut the position and leave the dollars, right, was not, I wonder whether they were allowed to do that.
The intent of what they wanted to do was probably beyond their charge and technical capability
Right.
or authority.
Which I think,
The verbal intent of what they wanted to do, and which they were very clear on, was instructions back to the finance department of, what they wanted to do.
And I also agree with your point that it should have, regardless of all that, and I mean, it's water under the bridge. I don't think it was right. I don't think it should happen again. I happen to agree with Mr. Walsh. But moving forward, are you guys asking for a full-time position here, as you did last year, or have you changed your minds and you just want funding to use outside personnel to address some of the shortfalls you're
Well,
having?
that's,
Yeah,
The
I have 2
point
points.
here
Okay, go ahead, Mike.
I'm
Is-
sorry, I didn't mean to.
That's okay.
is to continue having that funds available to give finance the flexibility they need to get the job done.
Go ahead, Mr. Walsh.
2 points on that. Number one, what should have happened last year is it should have come back to this board. And then we could have had our intent be, we don't want it to go there. They said that that was the way that they wanted it to go. And this board could have said, sorry, we think that the position should have been there. So we're either going to move the money out or move it into a contingency account until someone comes up with a plan about how we're going to get the things that were promised to this board. Because 5 things were promised to this board with that money last year.
Right.
And as of right now, I don't know whether we've gotten any of them.
Yeah. The
We said
challenge,
we definitely got hit on the audit again
Yeah.
for not having the grant accountant and they could do the grant work. So we got dinged on the audit again. Some of the money might be, it's still in the year, but at least we would have, under the charter, the way the charter works, gotten the role of have it come back.
there's
and
no,
say
I don't
this-
believe there's any time for it to come back.
Okay.
Conceptually, I don't disagree with you, but I don't
Okay.
believe within the way the budget cycle works and the timing allowed,
Mhm.
I don't believe there's an opportunity for it to come back
We could have-
before the mill rate is set.
Well, we could have moved it now. We could move it today with a vote. We can move it any day we want, actually.
And, right, and that's what
Right
I was
now.
saying, we should have come back to you after July 1st.
Sure,
and
yes.
And move it.
Yeah, I didn't
so
say
it-
up till July 1st. After July 1st, someone should
So it
have
was,
come back.
because this board has the ability and the
Mhm.
authority to move budgets from one line to
Exactly.
another.
Exactly,
So that should have happened,
yes.
and that would have made this year's budget clearer going forward. Doesn't address, Mr. Flynn, all of your point, and I don't mean to disagree with you at all on that.
But what's going on
I'm just
now-
trying to
Yeah, you're
kind of
trying to
frank-
sign a resolution.
I'm trying to get some duct tape here
Right.
to patch what would have been and address Mr. Walsh's point.
Right,
But
no,
what's-
I totally get it.
But what's going on is that the money's being spent, even though it never came back to this body.
Well,
Well-
it's being spent, well, or it's going to be spent. To your other point, though, which is more important, from my viewpoint, is we didn't get what we wanted to get by funding this position in the first place.
No.
So here we are a year later, and we're no better off than we were last year. And then, in fact,
Not
we're
in-
getting this request here. We aren't any better off. We went through this a couple meetings ago.
Yeah, not entirely. I mean, the issue is the money's here. The change in the budget line for fiscal 16 can still be made by your board.
Forget that, I'm not talking about that.
Yeah.
Move on from that. I'm
And then-
talking about the things not being addressed.
Well, we still have the balance of the year for finance too.
We're already through an audit, though, and we didn't get it addressed.
Well, the audit was as of June 30th of last year, so they would have never
Yeah,
been
but we
addressed.
already asked, we're coming up on three-quarters of the way through this year.
Yeah.
Right? And it's not addressed. This year.
It's not done yet, no.
Right. We haven't addressed the issue that we had, so
Right,
we're
but-
going to get it back.
It wouldn't have been addressed as part of the audit. It still can be addressed between now and June 30th, in which case it would be addressed in next year's audit.
Yeah, no, it wouldn't. They would still say for three-quarters of the year, this was a problem. They would still flag it.
Right, but
as
then they
having-
document the solution.
Right, but I'm not comfortable that we went another three-quarters of the year without the solution. Right? And we don't have a lot of other stuff that we asked for, to your point. We had several other items, right, that we don't have. And what I'm asking, and I think what we're asking you two gentlemen is, last year you obviously had a firm way of approaching this, was requesting another body, right? Have you changed your minds on that, as this reflects? And then I'll go definitely, I'm not
because-
trying to ignore you guys.
I want to hear the answer to that anyway.
Mr. Mayor, you're running the department.
Excuse me a second. The request for the body last year was to address significantly, there's 6 issues that I can recall offhand. One of the issues was to break down the library a couple of different ways, the branch library. Another request was develop grant policies, procedures, and control methodologies. Another concept was to see if we could develop a meaningful cash flow projection program so we could optimize our short-term investment cash flows. 5th item was capital asset accounting, and the 6th item was to have the staff do the FEMA grant accounting for the 100 homes that the town is the managing with respect to their FEMA grants. The town is the conduit between FEMA, the state, and the homeowner. I put together a plan, a concept of a job description, and asked for a person to do that. It was requested that I see if I could get these done without adding that person, thereby saving the town pension, OPEB, healthcare, Social Security, other benefit type of expenditures. I agreed to give that an effort. The reality of the situation is it turned out to be an excellent decision. It's been an extremely busy year with Penfield, with FEMA, with the open positions, HR, IT, purchasing, working on the phone system, hiring the fire chief, hiring the deputy fire chief. I did not have the time to hire a person. However, and to hire someone, you got to bring him in, you got to train him, you got to teach him. This person isn't going to set the policies and procedures. This person isn't going to design the models. That's my job. This person will be doing the work. With respect to those 6 projects, 2 of them, as the chair has mentioned, were in the Cohen-Resnick report. That was capital asset accounting. Second one was grant work. The capital asset accounting was not renewed in the report this year. That has been taken care of. It's no longer an issue. The grant work, we have a draft policy and procedure, but I need to do a little bit more work on it. We'll have the library work done hopefully this month. We will hopefully have the 5-year plan completed by the end of this year. I just remembered one of the 7th project was to convert payroll to electronic transfer from our current paper-bound methodology. We're hoping to get a significant amount of that done before the end of this year. There's one other item I'm missing. Cash flow analysis. We have, Connie, our department did run reports. I did develop a,
Mr. DeWitt helped out with that, right?
yeah, I'll get there. I did design a cash flow model for the information, and Mr. DeWitt has populated that model. We haven't had a chance to go further. We hope to get more work done before the end of the year. So all in all, from my perspective, we may or may not spend the $62,000. Given the way the year went, having the dollars available for part-time work, we're currently interviewing right now for a attempt to come in for the next couple of months to proceed in some of these projects, because we've defined them and fulfilled the effort enough that we can actually have someone come in now and do some work on them. So I think it's worked out better this way.
Great,
We-
so that means you don't need the position, right?
What it means is, as of right now, until I get some of this work done, it's difficult to really identify the total skill set that I would need. We certainly will need resources. We certainly will need hours of human effort. And this, for at least one more year, should not have been as a position. It should have been put, the dollars should have been put into fees and professional services.
Thank you. Well, that's a good answer. Appreciate that. Look forward to seeing the library work, look forward to the grant work, look forward to the capital stuff. I'm glad that's been taken care of. And I look forward to seeing the cash flow model too, because I haven't seen that.
Yeah.
So that's good. So it seems like you don't need the position.
I'm not asking for the position this year, correct statement.
Good. Mr. DeWitt?
I was just going to ask, Mr. Mayor answered it, the remaining unencumbered portion of the finance budget is almost that exact number, 62,008. So I think you answered the question that you haven't spent those funds, so I'm good.
We have spent some of them, but not much of them.
Okay.
Just one quick question. In regards to the
I
grants.
think, Mr. Becker had a question. No, that's my fault. Go right ahead.
Well, just, going through the actual final approved version of the budget versus what we were presented last year, this ended up being moved out into its own line. It was still coded 51010, just like the regular payroll, but then it was broken out when this was printed under regular payroll, new projects, almost like a fees line or a part-time, it's essentially coded the same but broken out. And then when the budget was done this year, it was sort of lumped back in there, which I guess seemed a little bit odd, because if you're sort of asking for it in a different way, but it was
That
broken
is-
out in here without any sort of approval, just sort of because you wanted to identify it separately.
Exactly right. You will see when you go through Ms. Gardner started doing this a couple years ago, where any new positions are not just lumped into the big payroll number. They're clearly identified, and even though it's payroll, even though it will go into that line when the budget's approved, it's broken out clearly, so when any board, this board or the RTM is reviewing the budget, it's
Yeah.
clear to you that this budget includes a new position.
And I get that, I guess, but then this year it got lumped back into sort of that general payroll, even though it's a more fee-based line.
I'm not going to say I agree with lumping it back in, but
Okay.
if it was a new position that was approved, it would be an old position when this budget came up, so it was put in there. I think that, as we discussed earlier, moving it to something like fees and professional services would probably have been a better reflection of how the dollars were to be spent.
And then the next part of it is looking at this, at this point, though, the 62 is built into this number, or is it somewhere within here at this point? That, I guess I'm a little bit unclear there. So I've broken out, and then I'm looking at the dollar amounts, and it looks like,
Page
it looks like
183.
it is.
Yeah, 180, the total on page 183 equals the top number on
What's a
page
zero?
182.
I guess it says 0 on the head count, so, but it does, so yeah, if you add all of that up, it gets the 8, and it goes up. Okay, and then you're
Yeah,
saying,
that's a good point. And it does kind of indicate it's not a person because it does say 0 on the head counts. Good catch.
and then on the, and then on your end, I mean, just thinking down to, you know, I guess voting nights or all that for.
Yeah, no, as I said earlier, this, you know, accept responsibility for not catching that. This should have been taken out of this area and put under fees and passage, no
But
question.
you do still for 17 want this 62 within the fees? I mean, because you
Correct
mentioned like,
statement.
well, this would be done, that'll be done.
Correct statement.
But you think between
not
finishing
sure you
them
need
and
it.
others, that's what I'm trying to understand.
Pardon?
I'm not sure you need it.
Well, you can have your opinion, sir, and I can have mine.
Right.
I run the department, and you try to.
Excuse me?
Whoa, wow.
Excuse me? Okay.
So my question is simply,
Over the line.
your view, you would like this money possibly to make an adjustment as to where it is, but in your view, you would like the 62 for fiscal 17, correct?
Correct.
Perfect.
Correct.
Thank you.
That's been
I'm,
answered. Any
I'm
other
good then.
questions? Yeah. Mr. Walsh?
When this was being sold to us last year, I thought the grant accounting was like a role, like an employee, that there was continual work. Now it sounds like you were just developing on a policy. Is that correct? Was there
No,
a
the
change?
first step one is develop the policy.
Yeah.
Step two is and the policy developed, and what has not happened with respect to policy is I have the policy developed, I have the internal controls concepts documented. I need to have Cohen Resnick look at the internal controls, and there's a couple of other tweaks that I need to make in that. Then we'll try to define from that what the effort estimate is that would be required to actually accomplish it, and whether that's, but Cohen Resnick did believe that it would take a full-time person. I'm not 100% convinced it will take a full-time person, and until I actually get the policy in place and actually start it going, I won't be able to know for sure.
Okay.
And I'd also like to apologize for my comment to Mr. Flynn. I was just getting a little
Too
hackled
late.
here. Well,
Stop.
it's maybe too late, but I'm just saying. But sometimes micromanagement is,
Sometimes what?
sometimes I feel like you guys are micromanaging a little bit, that's all.
No, I was actually sticking up for you. I was actually trying to get you the position. I was actually on your side.
I thought your
No.
comment
Well, you
was you
thought
don't
wrong.
need it.
No, that was after your comment. We're done.
Got it.
All right. Any other questions on the finance department? Seeing none, let's go to fund balance. I don't have the page number on this. Thank you very much.
Do you want to do revenue now, sir, or would you rather do that at the end of the debt service?
Let's do that at the end.
Sorry, where are we going now? Page?
131.
Oh, fund balance, I'm sorry.
Okay. Fund balance. Do you have the calculation of this? 550.
Thank you.
The original calculation, when we completed the budget book, was at, I think, like 8 point, or not, with requests from, before the first selectmen's adjustments, we came in at like 8.67 or something like that. Excuse me, 8.57, 8.62. Given the budget with the request for the $550,000 contribution to surplus, and the budget as adjusted by the First Selectmen's adjustments would increase our fund balance percentage from 8.54 to 8.65.
Questions from board members? No, I have one. I'll go to Mr. Walsh first.
So just to make sure the procedure's correct, at the end of the Board of Selectmen's adjustments, a final adjustment will be made to that number to keep it to where it's supposed to be. I thought we'd had a policy that we were going to do that.
We didn't do it last year.
We talked about do no harm and not go down.
We didn't do it last budget season, just saying. Went in at 650 and stayed at 650.
Right.
Yeah.
So it didn't go any lower.
No, it didn't go any lower, oh, for sure,
Right.
right.
Yeah.
Right.
It would seem that that adjustment should be made at the end of the Board of Finance meeting, because the Board of Selectmen may make some adjustments. They may be added to or reduced in any number by the Board of Finance. So rather than making two adjustments, it might make sense to make one when we have the final count. Certainly, the RTM can't do that. But this adjustment should be a relatively minor adjustment
Hopefully.
when you look at the percentage play based on what happens to the budget.
Yep.
Unless somebody adds a whole lot more to the budget, that shouldn't be a dramatic impact here.
I agree with you on that. I had one further question, though, on this. I'm sorry, Mr.
No, go
Walsh, I
ahead.
didn't mean
Go
to
ahead.
cut you. My apologies if I did. Mr. Mayor?
Sir.
The number you have here is just based on the 650. Now, we were over $1 million to the good last time we did a analysis of where we were coming in this year. Is that correct?
Yes.
So in fact, the likelihood, I know we got snow and all that, but the likelihood of us being at a higher number than the 8.54 and the 24.9 is high, is it not?
Correct statement, sir.
So we should be, even if we just did the 550, and I'm not saying we would, we should be higher than the 8.65. We should be closer to 9, correct?
It should move up, yes.
You know, we have been.
The $500,000 as a percentage of the budget is about 0.18.
0.18, right. And that's the 500, and then we've got another in there. Yeah. Okay. Does that make sense? Any other questions on fund balance? So this is, and I agree, and I'll go to Mr. Becker, this is, I agree with Mr. Tetro, something we should revisit as we get closer to the finalization of the budget. Mr. Becker? You sure? Yes. Okay.
And in fact, Mr. Chair, this would probably be the easiest one to adjust
You would hope.
by just adjusting the mill rate at the final day, when you have all the
Right.
information in. You have BAA, you have collection rates, you have the RTM adjustments, you have the Board of Finance adjustments, you have everything. By just adjusting the mill rate, whatever's left over would in essence be a contribution to surplus, even if it wasn't specifically put in that line.
I agree with you, and I think this is the second meeting in a row we've said we could adjust the mill rate to address something that we don't have information on the.
Actually, every time I talk about the mill rate, I mention that it's the Board of Finance that actually sets it.
Exactly, I know you do.
My only question about that, and correct me if I'm wrong, is if we do that, I thought every time we incrementally move the mill rate at its smallest amount we can, it was like a $250,000 swing. Am I wrong with that?
Yeah, I don't believe that's the
Okay.
case, because we do the mill rate out to more decimal points than,
Okay,
in
The mill rate only goes out to 1/10 thousandths.
that's what I thought.
Yeah.
If you remember, last year, we lowered the mill rate from 164, or no, we lowered the mill rate enough to change the increase from 164 to 160 at mill rate night. And by the way, that was just giving another option. Technically, the Board of Finance can adjust this after all the adjustments, and know that the RTM can't increase it.
Yeah.
So whatever number you set on March 31st should be appropriate, because anything that happens after that's a reduction.
Okay, I thought that we had gotten to the point where if you were going to make some changes where you wanted to affect the mill rate, that you needed it. Bob, do you know what the number is approximately? If because I thought you would, if you weren't going to make cuts or something, or if you really wanted to affect the mill rate with a cut, with a taxpayer, that you were really going to have to reduce that total budget cuts by at least like $250,000 or something like that.
Well, we literally did that last mill rate session. Or let me rephrase that. You
schedule.
literally did
Yeah.
that last mill
Yeah.
rate session. Though I paid close attention.
Yep.
And we lowered the tax increase by .4 tenths.
Okay.
And I do not remember how much of the mill rate adjustment was taking place at that point.
All right, I'll talk to Mr. Mayor offline about it, just to see. Okay, thank you.
Yeah,
Mr.
we
Chairman?
have the,
Okay.
hold on a second.
Let me ask this question while Bob's looking.
Yeah.
I just want to take, because I think this is a budget committee action. Are we saying that, are we saying as a body that we want to, the Board of Finance wants to look at the fund balance after we vote? Or do we want to look at it when we're setting the mill rate? I'm a little confused right now.
I think we should do it both.
Well, I think technically you want to do it before you vote, so you can make the change
Well,
in the budget you're voting.
I'm with you there.
No, we
But
want to
my-
do, we want to do it then, but then we have to look at it afterwards because we don't know what the RTM
The
is
further
gonna do.
reductions, okay. Got it, thanks. I'll take that as an action.
Every $100,000 up or down changes the mill rate approximately 0.04%. So like $100,000 would change it from 3.15 to 3.19 if it's an increase, and 3.11 if it were a decrease.
And you say we go out to the hundredths, or do we go out to the
Ten-
tenths?
10,000s. Because mill rate, yeah,
Okay.
it's point, we look at it as 24.76, but it's really .2576.
Okay.
All right. Go ahead.
I do based on that, though.
Mr. Becker?
Are we, if we do it under the mill rate, are we following our policy as a board then?
Well, we'll have to, though,
We'll have to.
because it's the only chance, if there's a material change from the RTM,
Yeah.
and we want to adjust the fund balance, the only opportunity we would have to do that is to do that in our vote on the mill rate.
Yeah, I just asked, are we following it properly, and we can go back and read it, or ask the
Well, we
auditors?
did
but-
adjust the mill rate last year by adjusting what we thought the collection rate was going to be. So it's
Correct.
certainly,
But on
and as
the
Mr.
fund
Tetro tells
balance
everybody,
policy.
it's our job, right?
Whenever I have the opportunity, sir.
I'm more asking for the fund balance related to the committee that Mr. Walsh shared.
And that's what I-
And then
that's-
how it ties back to the audit, and
Yep.
making sure that we're,
Okay,
you know what I mean, that we're doing it in the right area, that we're definitely covering our policy there.
right, so let me respond to that, right? We will make our adjustments to the budget. If we so choose, right, we can then calculate what the adjustment to the fund balance be, and have that be our last vote on the night we vote.
Which says yes.
Right, right. Then we would be strictly following our policy.
Yep.
Right? But then after that, after the RTM votes, if they were to make a material change to the budget, the only trigger we would have to be able to adjust our contribution to the fund balance would be by embedding it within whatever we do with the mill rate. Does that answer the question?
Yes, in theory, the RTM, well, they can only go down unless it's an appeal, right? So barring some sort of department appeal or something like that, where they, in a very rare instance, raise the budget, we should be safe in putting enough in when it exits this board, if it's our very last vote.
But we might want to we might want to take it down.
Take it down some, you think?
Right, because let's say for whatever reason they cut the budget by $2 million, it gives
Yeah,
us
no-
the opportunity to take it down more,
Yes.
if that were to happen.
Yeah, for going, obviously, to take it down.
Right.
I'm more saying, from our policy's perspective, we can always throw more money in or make an adjustment in the mill to reduce based on the RTM, but making sure that that we're at least within the budget line above or at or above our policy,
Absolutely.
which would have to be done really at the budget night to strictly follow that.
Absolutely. What?
Am I, okay.
I will tell you that the way we're talking about doing it now was not the intent of the committee, and I would have to look at the policy, because the intent of the policy, when it was written and the way we described it, was that each body, when they added, the first selectman would present a budget that would have a amount in for contribution to surplus based on whatever his budget showed it should be. Then when the Board of Selectmen got it, if you reduced the budget by $1 million, you could cut off of that based on, just so that we held, if you added $1 million, you'd have to add some on there as part of the motion. Then the Board of Finance would get it, and we would have the same, that was supposed to be the process. And I'm not sure whether, it's been a while since I've read it, it's multiple pages. I'd have to look to see whether that was a requirement in the policy, or whether
Okay.
that was the intent.
But it's our policy. So,
You change it.
no, I'm not even saying.
Okay.
All I'm saying is, we are the court of last resort when we set the mill rate. So if another body, to your point, decides not to follow the policy for whatever, because we're the last stop on the train, we can make corrective action to assure that the policy is followed, which, at the end of the day, in my opinion, is the most important thing, because that's what the rating agencies are going to look at, and the auditors are going to look at, and what's going to have to be disclosed. So I'm actually saying it's a good thing that we have that last stop. Now, to your point,
Yes.
you would like the RTM, because that would be the other body at that point in the process. You would like for them to follow the policy.
I'd like everybody to follow the policy.
And if we can get them to, and we don't have to do that, that's fine. But it's comforting to know at the end of the day,
Sure.
we're the caboose
Yeah.
on that.
I was just going to say, then doing it, it sounds like Jim's talking about procedurally, this is how it should go, but something could go wrong in the process, but when we get it back, we can fix it to comply with the intent of the policy.
Correct.
Someone
Exactly.
forgot to do it, or intentionally.
Because, well, and because in fact, let's play this out though, and I don't want to waste a lot of time on it, because we know we have corrective action. But let's say this goes before the RTM, and for whatever reason, the RTM raises the budget. Something got goofed up, new information came along, there was an appeal, and the RTM raised the budget by a couple $1 million. Well, guess what? No one's going to be appealing them to raise the fund balance contribution, right? So they actually don't have a mechanism to raise the fund balance contribution without an appeal. So in that instance, to follow our own policy, we would be compelled to make it up with the mill rate adjustment. Right?
Of course, I would point out to the board, if we don't make any adjustments, we don't have to answer any of those questions.
There you go.
Somehow I knew you'd come back with that. And by the way, Mike, why don't you say we set the mill rate again?
And again, I'm just, in the interest of saving you work, you don't have to make any adjustments.
Let's go to page number 189, and that's the assessor's office. Mr. Ross, come on up. Good evening.
Good evening.
We're on page 188, 189, and your numbers are on 190, 191. Sir, feel free.
The revaluation concluded. We're in hearings right now. And the budget for the assessor's department is down about 28.5%. Largest driver on the budget in the last 2 years was the revaluation contract. Revaluation is concluded. And the budget, there are no major changes to this department budget.
Okay. Do we have questions for Mr. Ross? Mr. Walsh?
Don, I understand why your fees and professional services line went down, like you just explained. Is that also the reason why your printing number went down as well, because you were having to do a lot more printing because of the...
Okay, you're talking about which line item?
Line-
Again, weak hearing, so my apologies.
Sure. It's line 56-100, printing and binding and photography went down 18.24%. And does that it went down because you're not having as much printing because...
Actuals. We're looking at the actuals.
Okay, good. Okay, thanks.
Go ahead, Mr. Timniak.
How are you, Tom? The fees and professional services, still $142,000. Is there a more detailed breakdown of that? If you go back to fiscal year 14, it's at $36,000. So obviously it was a gear up for the reval. And now coming in at $142 seems like we're, well, just what are we paying for that?
Okay. Repeat the question.
The $142,000 for fees and professional services seems much higher. Well, it is much higher than it was in fiscal year 14.
Okay, because we have litigation associated with the revaluation, okay? Back in the year 2010, when our last revaluation occurred. We had litigation. 200 court cases arose from the 2010 revaluation. We are unable to determine right now how many court cases will result from the 2015 revaluation. As far as appeals go, in the 2010 revaluation, appeals to the Board of Assessment Appeals, the two levels of appeal, Board of Assessment Appeals and Superior Court. In the 2010 revaluation, we had 550 Board of Assessment appeals, okay, and approximately 200 of those appeals moved on to Superior Court. Okay, this year, we had 293 appeals to the Board of Assessment Appeals, of which 270 were real estate accounts. So we're talking 270 real estate appeals. That's about all we can know right now. We don't know how many appeals are going to go to Superior Court.
If I may elaborate a little bit on that. We had like 250 appeals. We have no idea how many, that are outstanding. We have no idea how many go to court, as Mr. Ross indicated. But we can only properly handle about 100 a year.
Yeah.
So, and the functions that are required to be performed with each appeal are expert witnesses and appraisals. And if you look at the averages, it's about $1,200 average, combining the expert witness and the appraisal per appeal. So you take that $1,200 times the 100 cases, you get $120,000. So $120,000 of the 142 is that. Then there's well, the other thing that the town does is it does audits of personal property accounts, large, at random, make sure people are probably recording their and reporting their personal property.
Those are
So there's
specifically for-
$20,000.
For the commercial accounts, correct?
Correct.
Yeah.
There's $20,000 for that auditing, and then, no, there's $2,000.
It's 20,000.
For auditing, and then there's $2,000 for the GIS service.
Okay, yeah.
Okay, so all of the litigation, which we're going to go through for the appeals process, is going to come out of this line?
No,
Yes.
this is the,
No.
this
No.
is not the litigation, this is the expert witnesses and the appraisal work.
Appraisal work.
The legal work is in the legal costs, the labor cost, the lawyer, attorney fees are in the legal budget.
All right, so we have it in two, okay. All right. Well, real quick, the GIS system, can you go over that fee for me real quick?
If I might, the GIS system that the Greater Bridgeport Regional Council has been working on for the last 3 years, we've been using for the last 3 years, we now have a $12,000 a year maintenance fee for that. We split that between 6 departments that primarily use the GIS system, about $2,000 per department. That'd be like engineering, planning and zoning, building, confirmation, and the assessor, if I can remember those.
And
right off.
WPCA.
In
Okay.
WPS, yeah.
And the actual number is 12,320.
So is that a new bill, GIS bill?
Correct.
Okay. And we're splitting that amongst 6 different departments, and it's being housed here?
No, this is 1/6 of the bill that's being housed here, the $2,000 out of the 12 total.
So you have that spread across the 6 departments? Should that be its own line somewhere for $12,000 so we can keep track of it better?
We looked at it both ways, but in the interest of showing the true full cost of departments, we thought we should put it in the primary departments. But that's, you can look at it either way.
And that's part of MetroCog?
It's
instituting
part
that
of,
fee?
it's the system they develop for us, so that's part of the maintenance fee that we pay as part of MetroCog? Correct.
Is that a new system, Mr. Ross, we haven't used yet? The GIS?
No, we've had the GIS system up for 3 years.
Okay, so we're just getting billed for it for the first time in 3 years?
It's an
Correct.
allocation.
Correct, we are.
So MetroCog's billing us $12,000?
Correct.
Any other questions? Mr. Walsh?
Following up
Stone,
on
did you
Mr.
have
Timniak's question, and Bob, I thought that was a good explanation on how you got to the 142. But if you compared that 142 for what we spent 5 years ago for the same year, was that a similar number?
Okay, let's, as Bob said,
We only handle 100 a year, he said, right?
100 a year is our limit.
Yep.
And we're talking just the appraisal and
Yeah.
professional support, we're talking 1,200 a case. We can do a maximum, we can do 100 a year.
Yep. But was that number approximately what was spent 5 years ago for that line item? Did you ever look back at that, or when you were making the budget?
It's right in your budget book that it is.
It's close, yeah.
It says the 140,000 amount requested in FY17 support services is
Yeah.
the same amount approved for FY13 to support 2010.
Yeah.
So
Actually, we have that FY13, I think it was 130,000 was approved for litigation support. This time around, we're asking for 120,000 for litigation support. Because we have the 20, again, we added for the personal property audits, we're auditing 40 accounts instead of 20. So we have 130,000 in professional support.
And I saw that that was the same amount budgeted, it says, but it doesn't say the amount spent. But you don't, it's your recollection, you didn't really much go over that at all?
No.
Okay, good.
No.
Okay, that's more the question I was asking, to make sure you didn't, was it, you were budgeting 140 5 years ago, and all of a sudden, when you actually did it, it worked out to be 270. So it was
Yeah,
approximately
no,
the
we're-
140.
We're trying to keep the numbers down.
Great, thanks, Don. Appreciate it.
Okay. Any other questions on the assessor's office? Anything whatsoever? Seeing none, thank you, sir. Let's go to the Board of Finance. We can review our salaries. Page 201.
201 or 241?
201 is the write-up. 202 are the numbers. Thank you, Mr. Ross. Questions, comments on this budget? Mr. DeWitt?
Mr. Mayor, can you just remind me what's in fees and professional services? Because I know in given years, we put money in here for audits and different things. What's in the $85,000?
Actually, the only thing that's in the $85,000 is the Corona resident quote on the audit for the next year.
Okay.
That is their quote.
That is their
That's their
quote.
quote.
We
That's their
negotiated
full
that,
fee.
that's what it,
Got
that'll be
it.
their
Thank
full
you.
fee.
Any other questions? Mr. Mayor, I noticed that there's an item listed in the write-up about pension audit costs. Is that a change in policy and it's now being charged against the pension fund?
We're charging it more accurately than it used to be, yes, sir.
Does that mean you're charging it against the pension fund?
Yes, sir.
Okay. Why the increase in advertisements? Advertising? It
That's-
almost doubled.
That is the 5-page budget publication that you are responsible for putting in a circulation, as our charter requires.
Right.
And that is the actual cost for advertising it,
Why is it doubled this year?
because that was the actual we paid last year.
So the budget was wrong this,
No, they increased
They
their
increased their
advertising
fee.
costs.
by double.
And I'm hoping this will cover it.
And
For charter.
can you remind us of, that's a law, a state law?
No, our charter says, actually says a newspaper. It actually says a newspaper, not a form of advertising the document,
So if we do a charter revision, we should change that to say basically we need to post it on our website or.
Yeah.
Or make it public,
Website.
Right.
It's perfect.
because the
Right.
website would be ideal.
Okay,
Or at the library on the wall, too, you know.
okay.
People don't have a computer.
I know. Any other changes? Any other questions, comments, concerns on this budget? Seeing none, we'll go to debt service, which is page 312.
317, sir.
317. Can't read my own writing. Thank you. Mr. Mayor, you want to walk us down this?
Yeah, the debt service is combination of principal and interest. It's tied to the waterfall. It's a schedule maintained by the controller. We reconcile it to the issuing agent documentation, the financial advisor, and bond counsel documentation as part of the process in developing the waterfalls. And So that's what it adds up to, as we discussed in the earlier Board of Finance special session.
Okay, so it ties to, it almost ties to what I have on there.
Yeah, there's two adjustments. There's a WPCA and
In addition for marketing the bands.
in addition for marketing the bands. Thank you, Linda.
$23,600. Okay, the waterfall has 23,658. Am I reading that right?
Yes.
And this has 23,641 is the difference in WPCA?
Yeah, the difference is the Clean Water Fund, which is taken out, and the fees and professional services, investment cost to market the bonds and the bands, $25,000 added in. The net of the 42 and the 25 is 17. Theoretically, the 17, which gives you 17 from the 23641, which gives you 23658.
Okay, thank you. Do we have any questions on debt service? Seeing none. Before we take a break, Mr. Mayor, do we want to just look at revenue items that you have from those departments, and then we can take a 5-minute break and then go back to
Bless you. God bless you.
Park and Recreation, and God bless you.
What page was that?
What page would you like us, Mr. Mayor, to look at the revenue associated with tonight's?
What page is that, Linda, please?
It starts on page 43.
Page 43?
That's where all.
Immediately follows a new tab we added for you that says revenue and appropriations,
Yep,
to make
thank
it
you.
easier to find.
Excellent. So which one, so we want to look at the assessor?
The tax collection, I wasn't planning on going over this evening, that,
Correct.
okay.
I'm saying taxes, I'm saying the assessor you have numbers under.
Yeah, this is probably not in the same
You know, what, the
list
assessors,
as mine, but, I'm sorry?
the assessors, they want to do the assessors first.
I know.
That just reflects the actual filing with the state that the assessor makes, those numbers.
Okay,
For the revenue that's returned to us.
Okay, so we have $442,000
Correct.
budgeted, and we're saying that is what we're filing with the state to be returned to us?
Yes,
Mm-hmm.
And we already know that?
yes. We've already filed.
Linda, what's the reason why it's going down by 12.5%?
I was going to ask that too, yeah.
This is ours, isn't it? Oh, state grants, right.
Because you have
That-
less
oh, go ahead.
elderly and disabled filing for the program.
Okay, so this wasn't a
People
change in the
expire.
program or change in
No.
the legislation
No,
or
you have
anything
to
else?
qualify.
Okay.
How do we know so
Elderly
far in advance? I don't remember that from previous years.
The elderly file in May. In this case, they filed in May of 2015 for fiscal year 16.
Okay, this is for 17, though.
All right. Good point. Then I'm going to turn back to...
No, I think the...
I got us to here.
I think the estimate is the actual received for the current fiscal year. And the reason for the difference between the 492 and the 430, a little bit is we were budgeting what we were billing, and this is now budgeted based upon what we received.
Okay.
We received less than we bill.
Any other on the assessors? And by the way, Mrs. Gardner, I want to thank you for the organization of this. This was, by department's good. Any others on the assessors? Seeing none, can we go to the finance department and go through that? Which is the next page. It starts on 44, right?
Yes. The ones that I would, I guess, point out, and a couple, then if you have questions.
We're on page 44 and 45.
Correct.
Mr. DeWitt, this is It's listed on their finance
Oh, I
department,
see.
they're all
Thank you.
grants. Yep. And rent. Go ahead, Mr. Mayor.
So if we go to miscellaneous insurance, which is, I've worked on my schedule versus working out of the book, so I'm going to have to take some time to 48503. This is in a different order. 48503.
Miscellaneous insurance, you have going to zero.
Right. Thank you.
It was already zero the previous year.
Yeah. The prior year we had. Okay, now I've lost my place. I lost my place on my sheet. Well, we had business interruption insurance in prior years. That's why that's there. We don't have business. That was from the Penfield. We don't have that any longer.
What is the biggest concern on these items?
Yeah, that's. I'm looking for the interest income, sir. Which is on page 45, about one-third away down the page.
4401.
44001, dividend interest income.
Yep.
Yep.
You see there's two key numbers there, $861,951 for investment income, interest income. And then you see below that we have a change in market value of $566,000. The 861 represents current investments calculated out through the June 30, 2017, with maturities and instruments that mature between now and then reinvested at about 0.65%. The $566,000 mark-to-market is based upon a shock analysis that if the Fed increases interest rates during the year by 75 basis points, that would have a negative impact on the portfolio of $566,000. Obviously, if they increase them less than that, it would be greater. It'd be a lesser change in market value. If they increase it less, it would be a reduction. If they increased it more, it would be a further degradation in investment income. There's a couple ways to approach this. One thing we've done is we've reduced the duration of our investments to minimize the impact of the mark-to-market, which is required by generally accepted accounting principles, as you all know. The only way to eliminate mark-to-market is to invest in all CDs or to invest in for no longer than the end of the year. We have invested about $42 million, about $40 million. We actually, at this point, when this number is calculated, we're invested about $37 million. We have about $5 million in cash that we're currently investing. To take an example, if you were to put all that money in, and our average return is about 1.9%, if we would put that money in 15-month obligations, so there'd be zero mark-to-market, your return would be about 0.75%. So you actually come out ahead about 1.15% at today's market rates, but you are subject to the fluctuation in the market value of the agencies. So what we do to minimize that is reduce the duration and make sure we very rarely buy any bonds that have premiums, so you don't have to catch that amortization, which would ends up being a mark-to-market. I don't know if that was clear, but
So are you being very conservative here in your opinion, given the fact if you take the 3 investment-related accounts, the total return you're looking for next year is $234,000?
Correct. The Fed probability, if you will, there's Bloomberg and all these financial firms have what they call handicapping Fed odds.
Yeah.
And the major sense is that for the 16-month period, the 12-month period, July 1, 16 through June 30, 17 is 0.75. So we're there now. The one thing, though, the shock analysis that we did this month based upon current duration. So when we get to July 1, our duration will actually be 4.5 months less. So there's some conservation in there, in that calculation. So that probably would cover another 25 basis points.
Anyone have any questions? Mr. Walsh, and then I'll go to Mr. Hopkins.
Under state grants, the pilot program nonprofit organization, we are down on that. What you budgeted here, about $500,000 or 20%. And that is what the legislature did last year?
Right, all the
in
state.
adjusting it?
No, all the state monies are based off of the governor's proposal.
Governor's proposal.
Mm-hmm.
So he's proposing giving us 20% less in.
Right,
in
that actually squares with what we are receiving
Yeah,
actually.
he made that adjustment early in September, right? And he kept that adjustment permanent in his budget.
Yeah. Related to that, if you look on the municipal revenue share sales tax, which is 41148 on this page, I don't know which page it's on.
44.
4418?
Yeah. That is municipal revenue share sales tax. That's based upon a state statute passed a couple of years ago. This next year is the first year that that's being distributed to the municipalities. So that's an increase in our budget of $1,144,000.
Of our revenue.
Correct, of the revenue side of the budget. Thank you.
Mr. Hopkins?
Hopkins.
Hopkins, I'm sorry.
That's
I
all
keep
right.
saying it wrong. I'm
I've had
sorry.
worse, so.
And you don't have your name tag, so.
That's true.
It is on order.
Under rents,
It's not
Center for-
budgeted. Yes, that'll be 25,595. Yeah.
under Center for Women and Families, where do they rent? Where's their facility that they use? Do we know?
That's at the senior center.
Senior center, okay.
It's in back of the senior center.
Single
There's
office.
some portables. Our health department's back there, and the Center for Family Justice is back there.
Okay. Yeah, now they're the Center for Family Justice. And we charge them $1,800 for rent?
Correct.
So, well, we also give them money. So I was just wondering, why don't we just not charge them rent and give them a little less? Or give them an increase in the amount of money? Because it's nonprofits have been a sensitive issue in the last few years. And if I throw that out to anybody on this board who'd like to explain what the policy was, why that was done.
That was how the lease was negotiated back at the time.
So we have a lease?
Yes.
I mean, we could always reconsider that, couldn't we?
When the lease is up, certainly.
Well,
Then we could certainly tear up the lease if we chose.
If they were amenable, you could reconsider it at any time, couldn't you?
In
Correct.
some ways, I think it's actually a good way to do it, the way we're doing it, because the money's separate. And what we give them is separate. Because otherwise, what I think would start happening is all these nonprofits might say, hey, you're giving them, we want some
Right.
space as well. So they
this is
might
the
be
only
able
one
to
we
get
give.
it if we have it available, if they pay us for it.
but it looks like this is the only nonprofit we actually rent space to.
Not
I'm not
correct.
seeing anything else here listed.
The Fairfield Theater Company.
Fairfield Theater Company.
Yeah, with
That's
my
not a-
apologies, actually.
Mr. Mayor, I just want to make the point that Fairfield Theater Company is a for-profit group.
Is it?
Well,
I think they're 501c3.
they're trying to generate some revenue with their ticket sales, okay?
They're not allowed
Whether
to call it
they're
revenue
actually
under the
making a
tax law.
profit is another issue, but they're not there trying to help people who are in need.
Actually,
All right.
I would
I mean-
strongly argue against that when you look at the number of fundraisers they do. I've been to 2 or 3 in the last quarter, where they put on performances for not for the Pilot House, the Kennedy Center. They are a major source of revenue to those organizations.
Even at that, I mean, still, I really just couldn't put it in the same category, but, I mean, I'll just leave it out there for people to consider how we do that, because it seems to me that it would be more efficient to just not charge them the rent and reduce the money we give them to them, or just give them a increase in the money, because this is a very needy organization. I can tell you they've had years where they have been close to not making their budgets, and it's something to consider that it might be a way to help them. But anyway, that's all I had.
Thank you. Mr. Timniak.
Yeah, I wanted to talk on the pilot reimbursement, and I just want to give a heads up to, this is like the 5th year in a row we've gotten a reduced rate on the pilot money coming in, and it seems to be a target right now specifically for the state of Connecticut. Not every municipality has pilot land, and for those at home, our big properties are Fairfield U and Sacred Heart are the 2 areas. So every time the state of Connecticut makes a budget adjustment and they look right at the pilot program first, it hits Fairfield almost the hardest in the entire state. So I think that's something we as a board here, the Board of Selectmen and Board of Finance, has to be diligent on when we advocate to not touch the pilot program at the state of Connecticut. Furthermore, they keep growing the pilot program at the state by adding more nonprofits as the hospitals expand. So you have more and more towns taking pieces away from the overall pilot pie. I'll call it a pie there. And as that happens, Fairfield's piece gets smaller and smaller and smaller. And again, we have more at stake as a town because, I mean, this is a big number of revenue which is budgeted in our budget every year. And I'm afraid as the state looks to adjust an overall deficit, which appears to be insurmountable at the time, they're going to come back and they're going to hit the pilot program again. So I want to encourage everybody to be on top of the pilot reimbursement to your best of your ability.
Thank you. We'll go to Mr. Walsh.
To follow up on that pilot discussion, it's going to become particularly dangerous for us if, God forbid, the GE property goes to Sacred Heart, and therefore they expand their property, and that becomes a pilot property. Because not only will we lose taxes because the pilot program does not reimburse us, would not reimburse us the $1.6 or $8 million or $9 million, but if the state is going to keep hitting that and reducing it, it would put us in a lot more danger of a tax hole. So it's just something we're going to have to be cognizant on if the word starts spreading that, or GE starts going in a direction where they want to give it to a nonprofit or a university or something like that, as opposed to it going to a for-profit situation like the article about the Clebands or somebody else. It's going to be something that's probably going to be up in the air for the next couple of years. But
Yeah, and point well taken. I think that, A, just to be clear, at least based on my conversations with GE, there hasn't been any conversation pointing towards doing that. In fact, in their announcement, they clearly said they needed to sell it and get cash for it in order to help with the move. So that's one. Second, the pilot program has been a priority for the MetroCog and for the Bridgeport Regional Council for the last 2 years. And that's been one of the top components that we've talked about, lobbied the state and lobbied the legislature. Initially, because we were getting reimbursed at a 24% rate, and the simplest thing the state could do to help out municipalities, especially the bigger cities, was to get the pilot rate back up to a higher percentage of funding. It's a big number for us, but if you look at Hartford, Bridgeport, New Haven, they're $10 to $15 million each. And they could certainly use more money. They've got a huge, one of Bridgeport's tax-based problems is they have a higher percentage of not-for-profits on their grand list than I think any other city in the state. Hartford certainly competes with them there. New Haven gets bailed out a bit by Yale.
That's a guess.
But this is definitely one of the challenges, and so I concur that it's something that we all need to be talking to our legislators about and stay on top of any initiatives that come this way.
Thank you. All right, Mr. Mayor just passed out something on the Fairfield Theater Company, which the revenue is included within this area that we're talking about.
Yeah, I apologize for overlooking that, been still recovering from my inappropriate statement earlier. If you look on page 45, right around the center of the page, you see rental income, Fairfield Theater Company. Also reminding the board that you had requested a while ago an analysis of the revenues and expenses of the Fairfield Theater Company. So that's what I passed out. There is a difference between the schedule I passed out with respect to the revenue. The schedule shows 64,000. The budget has in it 60,000. There, based on conversations with Mr. Reed, because we had a dialogue about, given the opening of the warehouse, did it make sense that the revenues would only go up $10,000? And when they put it together, some numbers, and 64 is the new number. But this responds as support for the $60,000 number and to the board's request for a revenue expense for the town related to that, related to that lease and that activity.
Thank you, Mr. Mayor. Any questions from anybody on the schedule?
Yeah, where's the, we talked about this building maintenance and construction. Those are all the maintenance numbers that we've put in?
Yes, sir.
Okay. Did we have to put any money into the expansion of, into the, any?
No, sir.
Well, I didn't finish my question, but
Oh.
I guess you're guessing at it.
I'm sorry, yeah.
So why don't you tell me what you guessed that my question was going to be, and I'll tell you whether you
Build out of the warehouse?
This is going to be fun, because we'll do this for the rest of the night, and we'll see how many times you get it right. Okay? So why don't you tell me what you thought, and then we'll get to what my question was.
We did not pay for the solar panels, nor did we pay for the renovation of the warehouse.
No.
Not a good night for me.
The heating and ventilation, because I know we're responsible for the heating equipment, and we've had to replace it on the, I guess what it's called, the stage 1. Did we have to put the heating and ventilation equipment and pay for that for the factory? The warehouse, I'm sorry, the warehouse.
I do not believe so, no, sir.
All
I
right.
did not see it in the notes when I put this
You could just
together.
confirm that, that'd be great.
You
They
got it.
also added a sprinkler system throughout the facility that we didn't have to pay for either as part of that.
Okay. They put a sprinkler system in, okay. So we have been losing money, but because of the warehouse revenue, we're going to be now in the black, is that correct?
That's what it says there, yes.
Okay. I have a question in regards to the, other than them selling tickets, and I don't know whether we've audited this or not with them. When I get off exit 22, going southbound, at the bottom of the ramp, there's an advertisement for a church that's located at Fairfield Theater Company. Do they make revenue from allowing some church to come in there, and do we get any percentage of that revenue so that we have to heat our building for that church, use our utilities to pay for that church? Because while it might not be a ticket, it's a form of revenue.
I'll have to follow up with that. That specific case, I'm not clear on.
Okay. Other
But
people
thank
tell
you for
me
the
who
question.
they're in bartering groups, business bartering groups, that they barter. I might offer legal services, and I get whatever the value of my legal service on this bar thing. I can use it to buy tickets there. Does that part of it as well? Like, does that count as a ticket sale for them?
Yeah, I don't know.
Okay.
But
If you
I
can
think that's
find
a
that
very
out.
good point to follow up on.
My question is do they have other revenue sources that we're just not getting advantage of and using our heat, electricity, and whatever? I think it's a great idea, and maybe I might even be sold on it if the answer is no, that we're bringing so many people into the downtown as a form of business development, economic development for the restaurants, for the merchants. So I'm not saying I'm against it. What I'm saying is I would just like to know that we are, unless they sell a ticket to a show, but they're making $200,000 more revenue, but we're paying for that extra heat, extra electricity, extra usage.
Yeah. think your point's well taken, and I think we need to get those answers out to be clear, but you're also correct in the impact they have in downtown Fairfield
I agree.
is second to none.
I agree,
and
especially without the
especially in this
community.
economy.
It's a
that's been huge.
transparency thing. I don't think you're
Yeah,
saying
I'm not saying
Nope,
like I said,
I'm just-
I probably could be talked into it on an economic development, but I think we just need to know, because.
The answer to one of your questions, didn't quite follow the bartering piece, but they do rent the facilities out. The income that's in their financial statements, I don't remember it, but it's not a lot. That may go up now with the warehouse, but there's nothing in the lease that calls for the town to participate in any of the, or share in any of the revenues for the rentals. The lease only addresses $2 per ticket sale, for the duration of the lease.
And my comments earlier were just, I know, Mr. Walsh, you and I have had this conversation. I know you're a strong proponent of downtown business growth, and you're a strong supporter of the impact they have down there. My reason for bringing that up is just in case anybody else wasn't aware of our prior conversation. So I didn't certainly know where you stand on that, but I think your point's well taken.
I
I
just
also
more for
think,
transparency purposes, and I think, I know they got a long-term lease, and I'm not saying they shouldn't be, especially if they're putting a lot of investment.
Well, they
into-
put a-
Like, I was happy to hear that
Yeah.
they
Okay.
put the sprinkler system in. But I think we just need to know for transparency purposes, or at least the town's got to know. I mean, and I presume that when they do a not-for-profit, like you said you attended 3 of them there, that those are not counted as ticket sales. They're just donating
to the best of my knowledge, they're not, but I think we should confirm that. I think just so everybody's
Well,
clear.
no, those are not. Those are rental revenues, which we do not share in. That's what I was trying to say.
So that's, okay.
Yeah, that's what he said.
So,
Okay.
what I was trying to say was that one of the other components is they invested $1.5 million in the build-out of the warehouse.
Yep.
And if you haven't been there, it's a phenomenal facility. It's something else that's going to be a major attraction to downtown Fairfield and bring more people in to help our downtown. And again, in this economy, I can't stress enough, given the problems at the state and every other level we've talked about, this is one of the things that's keeping the Fairfield economic engine pumping.
Thank you. Any other questions on revenue related to the finance department? Let's go to Mr. Timniak.
Yes. So I checked the OPM website, and I looked at the statutory formula grant total for state grants from the state of Connecticut, and they have listed on their website $8,213.61, or $8,213,061. We have listed here $5 million for fiscal year, $5.4 million. It looks like there's a difference of $2.5 million. Are all the state grants we're receiving on this page, or are they spread out maybe through on Board of Ed side?
There are some on the Board of Ed side, that's correct.
Can we just, in the efforts of time, can we just, Mr. Timniak, if you can provide that reference to them?
Okay.
And can you guys just reconcile those two numbers?
I think we can provide a schedule here that shows what we have.
Okay, let's move on. You can provide the schedule, and we'll go from there. Okay?
Okay, one more question, if you don't mind.
Sure,
What's
absolutely.
the plan if, for some reason, these numbers don't come to fruition at the state level right now, and they reduce these numbers across the board? When would we get an update on that, and what would be, I guess, the recommendation from the Board of Finance, or the Finance Department, in case our state revenue comes in at like $400,000 to $700,000 less than what we're planning right now?
Well, it's not necessarily the Finance Department's responsibility to do that, but, the normal contingency that the town carries is about $450,000. We obviously do our best in the Finance Department to monitor the process until the final budget votes by this body.
I
But,
think
yeah,
that-
no, that's certainly, especially in today's environment, it's an issue that might deserve more attention than it has in the past.
So we would
It's
look at...
got me reading the Hartford Courant every day, but I think the simple answer is, if there are any adjustments like that, we'll review them appropriately and look at what options we need to take.
So we would look towards contingency first, probably? There's money
That's
for
the
that? Or is
that's the
that-
simplest answer, but we would look, again, it depends on what happens to the state and what we need to do, and also when the state decision is. They're not due to make their final decision until May.
Yeah, the total statements made in our budget is $8,208,801. That includes the ECS grant, $3,583,000, pilot program for $2 million. Those are the big ones. Municipal revenue sharing, $1,144,000. LoCIP, $1,085,000.
I was looking at page 54. I was looking at that total state grant number.
Page 36 might be better for you.
Page 36.
Guys, let's,
It's on page 36.
9261. 9267, sorry.
All right, we'll figure this out, and you can move on with the meeting.
Thank you. Any other questions, comments in the finance department?
I have a couple minor questions on a couple of line items. First of all, I'd like to thank Bob and the finance department for putting together the Fairfield Theater Company information that I had requested. And I think it was a good time to do it with the expansion into the warehouse. So thank you for putting that information together. Secondly, this line, and it's not a lot of big money, but it's the miscellaneous finance line. What is that, and why does the numbers fluctuate from like $10,000 to $250,000 last year, and it's up now 3,800%? It's on the revenue line
It
45.
went from $250 to $10,000.
Yeah, that's the 3-year average. So I guess they're guessing they're taking the 3-year average. So
There was a...
what's that line? What's that mean? That miscellaneous finance?
Fees for return checks, that kind of thing.
Oh, when we bill people for return checks and stuff? Okay.
It's a 3-year average number, so
Yeah.
apparently something happened X number of years ago
Okay.
that got carried forward that I...
But you think that's consistent? We'll get another, you think that 3-year average is somewhat consistent? We'll get
No,
another
I'd
10?
probably, if I've, probably be better if it was $250.
Okay.
I think if you go back a couple of years, there were some surprise revenues. There's some programs we put in that
Okay.
we didn't
Okay.
budget.
Okay. And maybe I missed this during the conversation regarding the dividend and interest income. Why do you think the number's going to be going down so much from last year, the budget, to this year? Is it based on what the actuals were?
There's a couple of things. We are going to meet our budget this year because we are doing better, as of right now anyway.
Rates going down or something?
We're doing better on the mark-to-market.
Uh-huh.
But the actual, there was a little bit of a boot last year in the calculation where we overstated both numbers when we, so the 1.1 million is too high, than what we thought last year.
Okay.
And the 353,000, I think his numbers in there, was also too high from last year. So if we booted that by 100,000 or something.
And towards the end of the page, the parking authority lease / fair premium rent, that's what they pay us to use our land? Right. Okay. By contract. Yep, by contract. Okay.
And that's a schedule
other
that...
questions?
Yep, that's fine.
All right, seeing none and looking through this, I think we've covered all the major revenue items relative to departments we went over tonight so far. So what I'm going to
Although,
do...
we're going to reserve our right to have the school talk about their revenue that happens to be in
Absolutely.
finance?
Yeah.
Okay.
So, we always do. So let's take a 5-minute recess, and we're going to come back, and we're going to do Parks and Recreation. And I want to start with the revenue side of Park and Recreation, and then we'll go into the expense side. Okay? So 5 minutes? All right. Are we all set? Yes, sir. Thank you. I'm going to call the meeting back into order from recess, and hope you all got to play kickball or whatever at recess. And let's, we're going to stay in the revenue section. We're going to use the nice area that Mrs. Gardner put together, and I'm going to go directly to recreation, Parks and Recreation revenue. This is page 49 I'm going to start with, and I think probably the best way to go about it, unless somebody has a better thought, is we'll go through the revenue for Parks and Recreation right here on page 49. Then we'll flip to that department budget. We'll go through that expense. Then we'll come back and go through the golf courses and the like, the marinas and the golf courses. Does that make sense to everybody? All right. So we're going to start with the stanza on page 49, Recreation, Park and Rec. The revenue is $232,000 for the year. Mr. Lombardo, welcome.
Good evening.
I'm sorry.
And Brian Nareau, the chairman of Parks
Brian,
and
nice to
Recreation.
meet you. I'm sorry I didn't know your name. Please. Thank you for your work for the town. Go ahead.
On the Parks and Recreation budget, we anticipate revenue of $232,045. Our increases, what's driving that is that through our revolving account, we brought in, we anticipate more money coming in through programs. We also anticipate a higher growth in rental of facilities. We brought in more money. We started charging for bonfires, which was, you charge $50 for every bonfire. We have over about 150 or plus or minus. I don't know if you have any direct questions.
Anybody have any questions on the 232? So the increase you're saying, I want to make sure I have this right. You're at 196 this year. Are you going to exceed that this year?
We anticipate, yes.
So where do you think you're going to be?
I'm sorry, I didn't bring that. I had that on my quarterly report, but I didn't bring that information.
Okay. But your field rentals are going up dramatically next year? You're at 34,000 this year, 45 next year?
On the field rental of facilities. Yes.
Do you know why? Is there more available? Is there,
We have more camps coming in.
so you have more
That
demand?
fluctuates, correct.
Okay. So you have swim and sailing is even, recreation programs you have going up $30,000?
Yeah, that's the revolving account.
Yep.
Anything over 200,000.
Okay. Then you have the miscellaneous parks, which is coming down.
Right, that, ever since we went to the computer in that office, we started putting the revenues where they belong. These are mainly the picnic tables, horses, the sawhorses and things that people rent from the town, chairs and tables.
Then you have tennis concessions, then the field rentals. And would this be a good time? There's an, I'm sorry, please, Mr. Stone, please.
I don't know what you're going to say.
No, go right ahead.
On the field rentals, which is going up quite a bit, is there going to be more maintenance on the fields?
Yes, that's where a lot of, thank you very much, because that's where money that's coming from also. We're charging the softball players, so that would be incremental in that.
But is there,
It goes into my account, but the
Okay.
Public Works budget went up to maintain the facilities, so it's paying for it,
Okay.
or not paying for it, offsetting the cost.
Mr. Lombardo talked about, well, he started the revolving fund. So does anyone want to refer to that document? This is something that, for those of us who've been on the board for a while, you started to put together several years ago. It was very good to walk us through what the programs you offer are, whether they're operating positively or negatively, and then what the revolving fund balance is. So do you want to just walk us through it very quickly? This is relative to the numbers that Mr. Lombardo was just talking about as
Yeah.
well.
We have the revolving account, which we've had for over 30 years, and we've expanded it. These are pay-as-you-go programs. Some of the programs that help offset others that we start, you know, and, but many of the programs where we're increasing is our, obviously in volume, our soccer program, we went up in our fees. Matter of fact, all of our programs, we went up on fees. A lot of them are outsourced, so we take a percentage for use of our property. And what happens at the end of the year, we are allowed by policy with this board and the First Selectman's office not to have more than $200,000 at the end of our fiscal year runs from, with this program budget, runs from October 1 to September 30th, because we overlap on our programming. All our money comes in this time of the year, and we don't pay our bills until August and September, because our programs start in the summertime. This particular year, we gave to the town 165,000 in revenue. I had budgeted 50. The reason being is we had a couple of capital projects, and I'll be coming before this board probably in next month or two. We're going to be needing new software as our program will not be supported any longer by the company, and we don't wish to go on to their active software. So we will be coming for an appropriation out of this fund that my commission has already approved of approximately $70,000. The other thing is we're replacing backstops that the commission approved at like Kiwanis Field for about approximately $20,000. So that's how I arrived to giving next year's funding at $80,000. So I really backed into the number projected for next year.
So you'll be giving back to the town 80,000.
That's what we're estimating. As last year I estimated 50. And it all depends on the growth.
Do you have, anybody have any questions on the revolving fund? Mr. Walsh?
Jerry, when you say playground, that's the summer programs that you run, the camps that you run at the playgrounds?
Yes,
Or is-
those are the camp programs. Plus
Yeah.
we started many new playground programs
Yeah.
before and after, but that's what they are.
That's what that is, okay. I will say it always, every year it surprises me how much your credit card fees are that add up because of the number of people that are paying, go through the program. You know, parents who are signing their kids up, but it just shows you how that adds up to almost $150,000.
Well, and also that is also covering, as you recall, that covers not only these programs, but it covers the golf course.
Oh, that's right, I didn't forget about that, okay.
And it covers Penfield.
Okay.
Okay, because we didn't wish to put it into the budget, if you recall.
Yeah.
And so we take it out of here. Okay, we're trying to run it somewhat like a business on a small scale and cover as many costs as we can. If you also recall, the reason, and that's why our operating budgets are a little lower than normal, is we used to have all the salaries of all those employees of all in the operating budget. Then when we made it as pay-as-you-go program, people were paying right along, and it's been very successful.
Okay. Mr. Hopkins? I gotta write that down.
Jerry, what are SPC rentals?
South Pine Creek, the new building
A rough night for me.
that we, down there,
Show the chairman's from below.
that's what we rent out.
Because I see that that's looking at, it would be a negative for the year. $27,000?
To date, yes.
That's the,
Yep.
what kinds of fees do we charge on that?
$600 for a 4-hour party. There's no alcohol. It's mainly for birthday parties. It's starting to get momentum. We're moving along. And be honest with you, I'd have to really go back and look at exactly what the negative is on in that column.
I was just wondering, that's one thing I would wonder if a small fee increase might generate that to even.
No, matter of fact, I had to lower just to try to get, we were at the same rental rate as Penfield, and I had to lower it. It also is, like I said, we're just beginning to get some momentum in rentals.
That's a relatively new resource that just opened up about 18 months ago, Jerry?
Yeah.
All right, so it's still ramping up in terms of people being aware of it and realizing that's a resource they can rent out.
Can I ask a question on that?
Yes, please.
This may be a dumb question, but I'm going to ask it anyway. Why can't you have alcohol there? Rent it out to for adult functions.
Well, it wasn't built and designed to be a rental hall.
Gotcha.
Okay, we have an exercise type flooring on there.
Okay.
The other thing is, it's meant to be a children's, a youth facility.
Gotcha.
So that's the reason. And really, that was a policy that I determined. Plus the fact that I didn't wish to have alcohol in that. I didn't build it in that neighborhood with the concept of a rental hall.
And functionally, what it replaced was the old beanery, which was a youth-oriented facility for 20 or 30 years.
Great.
Thank you. Any other questions on the revolving fund? Mr. DeWitt?
Good evening. The first 5 lines softball, that's adult softball, correct? Because you don't charge Little League, you don't charge softball
These
Little
are all,
League?
these are all, those are adult programs.
And you said in the beginning, kind of maybe a little off, just in quick comment, we started charging for softball. These are new line items?
No, what we're going to do is individual players. In other words, when you play softball, your team plays, pays for the umpires, pays all the costs.
Right, yep.
We don't charge the individual, okay?
Oh, there's no fee to play on the team?
Right. Now there's going to be a fee. If you have 15 people on your roster, we want $25 per person. Okay?
Oh, okay.
That's less than what the Little Leaguers pay, or girls
I'd say.
softball.
Yeah.
Okay? So that's going to help offset maintenance on the ball fields. As you know, we went to a new turf management program. We outsourced a lot of it through DPW. It's proving itself to be well worth it. And this, obviously, at the end of the year, gets transferred back to the town.
Right. Got it, thank you.
All right, Mr. DeWitt?
Yep.
Anyone else? Seeing none, I'm going to go to page 293, which is the Park and Recreation expense budget. Okay? Mr. Lombardo, go right ahead.
As soon as I get there.
Sure. 292, 293.
Yep. Thank you. Parks and Recreation budget is basically the management of all the other areas, all the entities under our control, golf, Penfield, waterfront. These are all the full-time employees. Okay. The only thing under seasonal employment for programs is our special needs program. That's the only one that we still carry in our budget. But other than that, you can see it's a 2.73% increase, and it's mainly due to the contractual obligations. And what I did was, in a lot of the accounts, you'll see 0, but I had an increase in buildings, maintenance, and grounds. What I did is combine those areas to increase that line item, because that's where I was spending it all, to maintain the tennis courts on a yearly basis that we started several years ago, and we do so many a year. So I just really moved money around within the line items to show where I'm spending it.
Mr. DeWitt, anything else?
No.
Okay. Anybody else? Seeing none, we'll go back to revenue. Isn't this fun, flipping back and forth? We're going to go to recreation on Penfield, and that is split between page 48 and 49. It's the bottom of page 48 and the top of page 49. Just to clarify, no revenue in here for the Penfield Pavilion where construction is now just beginning, correct?
Correct.
All the revenue associated with this is related to the Jackie Durrell Pavilion in that area, correct?
Oh, no, no.
Okay, please,
No,
don't tell me.
no, 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 no. We should be opening, if we're on schedule, and we open in January.
Oh, that's right. Yeah,
We
go ahead.
budget for a few rentals. I'm
Yep.
being very conservative on the number, because I have no idea when I'm going to start advertising. And, if someone wants to book a wedding, I want to make sure we're going to be open. I'm estimating that we'll probably start in February with rentals, maybe March. I'm only anticipating about 10 rentals for that area until we really get going. I'm hoping we'll get more. But the lockers will be open in May. We take all the money in next, in 17. The commission did increase the fees after it was passed, how many years ago? But it was, after we did the initial that we thought we would be open this year, we did increase our rates on lockers. The locker rates went up $100 each, and $200 for non-residents. So that's why we're anticipating 52,000, where we were always estimating around 38,000. Boat racks, stay approximately the same, 20,500. We went up approximately $500, but concession fee, that is what the contract would call for once we do open. Jackie Durrell, that is what we're anticipating. We'll be close to probably 110,000 to 115,000 this year. Okay. And as I said, we're very conservative, 12,000, because my crystal ball broke. So I'm not quite sure how many we'll have, but I think it'll be more than $12,000, but I'm not going to tell you that.
And then again, that's from January through the end of June.
Correct.
So,
Correct.
because it's not available this summer for that.
Right.
That's, Mr. Walsh, you had a comment?
The seasonal rental, Jerry, not the 52,000. Last year, did we made 38,000?
No, that was what we estimated, because if you recall, this time last year, we thought we were going to be
We
open.
didn't have it, that's right, okay.
Okay.
And then the concessionaires agreement is, do we still have a contract with that?
Yes, I still carried it over, and he still wishes to come back. He only had 1 year of his initial bid.
So he'll get the 1 year, and then you'll rebid it?
No, he'll get, it was a 4-year.
Okay.
So we'll carry
He's only
him.
1 year into it?
I believe it was 1 year.
So you'll continue the other 3 years?
Right.
Okay. Okay. That's it on that, thanks.
Okay. Any other questions on revenue related to Penfield Pavilion complexes? Seeing none, we're going to go back to the expense side of this budget, and that's page, I want to say if I could read my writing, 258. Am I wrong there? No.
289.
Two what?
289.
Yeah, okay. So I can't read my writing. Thank you, Mr. Lombardo. 289, Penfield Pavilion Complex. Do you have anything you want to point out relative to this budget right now?
Well, just that we reduced it, and it's mainly reduced, it's, as you see, it's a minus 6% increase. And it's reduced mainly because last year I budgeted for 2 restroom trailers. We only used 1. The reason being is when we thought we were going to be starting construction, we had already turned off and tore, all the water and et cetera, et cetera. So we only used 1, and obviously this year we're already in beginning of the construction stage, and we'll be having 1, and I also got a little better price. So other than that, we should be good.
Any other questions? Yes, go right ahead, Mr. DeWitt.
Your highlights and goals, you have, the first one, provide clean change rooms, as well as daily lockers, but we're not having daily lockers anymore, correct? Only seasonal,
Yeah, that's a good point. Thank you.
right? And seasonal lockers can be purchased by non-Fairfield residents?
Yeah, we-
At a higher rate?
Right. And I
Is
think,
there a percentage, 80,
yeah,
20?
I believe it's 20% we
Yeah,
carry.
20%, okay. Thank you.
Yes.
Any other questions? Go right ahead, Mr. Becker.
So, just on the locker side, I mean, how big is essentially the wait list, or a lot of it is sort of outside of who, like, how many people get turned down every year, essentially?
There is no
Like,
wait list.
Okay.
Okay, we do a lottery.
Lottery,
And every year we get a flow, and that really came from a combination of this board, RTM, recommendations of how we did it, and my board. But we really, and it's been working.
But I guess, how many people don't get to get a locker?
I don't know that. We haven't done it in 3 years, Dave, so I really don't have
Gotcha.
that answer.
Okay.
You good, Mr. Becker? Anybody else? Thank you. Seeing none, we'll go back to page 49, and we'll do the waterfront and the marina revenue side. Back to you, Mr. Lombardo.
Our beach stickers, obviously, we estimate that we will hit that number of 780,000 next year, being that Penfield will be fully open, plus what we've brought in from prior years. I anticipate hitting the 730 on the beach stickers. And that's not just beach stickers, that's the lake money, et cetera. It's, the beach parking, we also believe we'll hit that number. Although last year, this past summer was a very good summer because we didn't have any rain, and it was very warm, but we're anticipating that we'll hit that number as we already have 220,000 in the bank this year. Marina dockage, we did go up in our rates for the slips, so we anticipate hitting that number. Also on winter dockage, we went up on that rate as well. The concessions are the bid prices, so we anticipate hitting those numbers, provided we have a fairly dry summer.
Are there questions from board members? I do have one. For a long time, there's a lot of discussion over the fact that our boat fees and the marina fees were one of the greatest bargains around, right?
That is correct.
There was a rate increase to that in the past couple of years. Is that correct as well?
Just went up 10% this past September? This past, it's in effect right now.
Are we still well below market there, and is there any thought of another increase?
We're not number one, we're not number 10 on a scale. I'm going to say, if I recall correctly, we were in the middle, but there's still room to move.
And is that something being contemplated by the commission at this point in time? Not at this point, because we just did the 10% last year, but it is on the calendar to look at again.
It's not on the calendar presently, but as the summer goes through.
Well, I guess what I'm asking, Mr. Lombardo, is there a policy that we're going to review it every couple of years? I mean,
That's when they normally review it. Basically, it's been every 5 years.
it's been a long, right,
Every 5 years, that's why it went up 10%.
right.
The commission now may look at it differently. Andy's getting a lot of things under control down there in the sense of organization and doing things, so we may have a different perspective on how we move forward.
Are any of these other fees going up? Is that some of the reason for some of the increases here?
The only fees that went up were for non-resident beach stickers.
Yeah,
We have to pay sales tax.
right.
And I didn't want to collect sales tax down at the parking.
Right.
So we raised monies enough to cover that as well as bring in excess revenue.
Got it. Are there any other questions on these revenue streams for the waterfront or the marina? Mr. Walsh?
Why did the marina pump out credit go away?
I'm sorry?
The marina pump out credit, why did that go away?
I don't have an answer for that.
Okay.
I can check, though. I'll get it to you.
Yeah, I'll call you offline. It's not a big number.
Okay. I think, oh, wait a minute, I believe I do. I think we got the state, it was a state program, and I think the pump was bought by the state. I believe that might be the...
Okay.
Okay. Let's go to page 296, which is the waterfront and the marina expenses. And we'll notice the expenses here, just, and Ms. Lombardo, I want to give you credit. You said you've been trying to run like a business for a number of years. We had a lot of discussions about that through the years. And if you look at this, what you're doing in the waterfront, you have about $1.6 million of revenue, and I know it's not all in, and et cetera, and about $440,000 worth of expense.
Correct.
And I think we'll see similar at the golf courses as well.
That is correct.
Right. So,
These-
are there questions on the waterfront and marina budget? I'll give everybody just a couple minutes to take a look at it for anything that pops out at them. Mr. Walsh, go right ahead.
Why is the Social Security contributions going up by like 9%? Is it a new rule we're collecting Social Security for the first time for some of these people, or I'm not sure? Why would it go up?
Oh, no, it's proportional to the
The salary increase?
salary increase.
Okay, okay.
Okay?
All right.
We don't pay Social Security for these people.
Okay.
We pay 1 point Medicare on it.
Okay.
All set? Okay, seeing no questions on that, we'll go to the next budget, which is the Carl Dickman Golf Course. We'll go to page 50. Thank you so much, I appreciate it. It's page 49 and 50. The end of 49 and the very top of page 50. Thank you very much. Thanks for being here this evening.
Mr. Chairman, if I may, I have Peter Grace, Superintendent.
Yes.
And Ryan Scully, the Chairman of the Golf Commission.
Thanks for being here, guys, and thanks for the lateness of the hour. Go right ahead. Let's start with the revenues on the Dickman Golf Course. Roughly flat year over
Yes.
year.
And basically, that's what it is.
Are you hitting those numbers this year?
We will hit those numbers this year.
Will you exceed them because of the better weather and you stayed over?
Not at the par 3. It's going to be close.
Okay.
Matter of fact, we're opening this week, so.
I saw that.
Really?
Yes.
But doesn't that mean that next year is aggressive? You've had a string of good weather in the fall that we're playing late, and now you're opening early.
Right, but last year we opened late.
That's right.
Yeah,
Okay.
so we are being a little aggressive with our numbers, but we also, at least with Smith,
Right.
when you see those numbers, we went up in the rates.
Okay.
Okay, so that's how we can meet the numbers.
Okay. Are there any questions on the revenue related to the Dickman Golf Course? Mr. Walsh?
You have a driving range down there now? That's the new? Is that
Yes, we
something
put
new?
it in last year. It's just us hitting into some nets.
Into the net, I saw the nets up there.
Right.
Okay, so you charge a fee for that, or bucket of balls kind of
Yep,
type
bucket
of
of balls.
situation? Okay.
Yep.
Okay.
Just, we're not going to bring in millions, but it's
Yeah,
just
yeah.
something for the, somebody to go down and practice.
Okay.
Okay. Let's go to the expense side, and that's page 298. And there's also some capital involved, which is page 300.
This budget, obviously, as you see, is a -7, almost 8%. The biggest thing is that dropped was the capital. It dropped nearly in half. We're only asking for one piece of equipment. We did lower seasonal payroll because we weren't hitting our mark. We haven't hit it in several years. So in this particular case, I was able to reduce it with the number of people I had down there. Jim's, running it a little bit more efficiently than we were in the past. Other than that, everything is staying status quo.
Any questions from anybody? Mr. DeWitt?
So on the Capitol, do any of the neighbors have problems with 40-foot net going up next to their yards? Or are they happy that there's no more balls coming in their yards?
The latter.
The latter? Yeah, okay.
Do we want to put it up? No, not really. But they're complaining.
Oh,
there's
they're
several-
complaining.
yeah.
Oh, so
Well,
this
that's
isn't-
the reason.
How's it
This isn't
complaining?
you initiating this, this is
No.
a...
This is in response to a neighbor. They've been complaining for about 4 years now, probably.
Oh, no kidding.
Longer.
Probably longer.
Longer than that.
Jerry made some adjustments a couple of years ago, but they didn't solve it. And we're talking, if you're familiar with Smith,
I try not to hit their house, but I just
Second
ball just
tee.
keeps going there.
second tee, if you slice it,
No, it's a Carl Dickman.
it hits the road, hits their front yard, in some cases hits their house. There are stories of some of our less mature golfers trying to do that on purpose.
Even mature golfers.
Not necessarily on purpose.
Oh, on purpose.
I didn't know
you're
there were
saying.
mature golfers.
Okay, thanks.
Okay. Any other questions? Very good. Then we'll go back to page 50. For Smith Richardson. Jerry?
Basically, what we've done is, the numbers that we're anticipating on the passes are what we anticipate hitting this year. Our greens fees have gone up because we're anticipating, we went up $1 a round. So we do anticipate, particularly this year, of hitting our numbers, possibly exceeding in a couple different areas. The other area that we're doing well in is our cart rentals. We are able to get them off the cart paths because of the funding that we've been doing, all the work we've been doing to fix the drainage, et cetera. It's allowed us to get the carts off the paths. So we get more play that way. The other thing is this year, another increase is Friday, May through September is a weekend rate. So that is going to, we anticipate a greater take on revenue there.
Mr. Stone?
Why are concessions down?
Because that's what he bid.
Because, I'm sorry, what's that?
That's the bid.
That's the highest
The
bid.
bid.
That's
Oh,
how much
I
the guy-
see.
The highest bid.
Oh, okay.
Mr. Walsh?
Well, first of all, I'd like to congratulate you guys for getting the, I think it was the CGA Golf Course of the Year?
CSGA.
CSGA. Congratulations on that. That's quite an honor, and especially being the first public golf course to get that ever. I think that's great, and hopefully that'll lead to some of these greens fees going up once that's publicized a little bit. But I think you guys have done a great job up there, and that says a lot to me that, to get that designation. Do you think that will have some, increased traffic because of that designation?
We believe so. We're hoping we're going to market off of that.
Okay.
And we know we have it on our webpage. The articles that were in the paper were very helpful. We think we'll see a number.
And that's on their website, right? So golfers can see.
It's on CSGA
Yep.
as well as on ours.
And plus, you guys give us the money to keep improving it, and you
Right.
just okayed some more money, so
Oh.
away we go.
There
Well,
we
we
go.
open on Wednesday,
Great.
I do have to say, I've referenced it before, the 10-year plan that was put together by the Golf Commission that we've supported for going on 6 or 7 years now, I think.
Yes.
I think it's been one of the most successful things when you go out and you look at that golf course as compared to what it was. And then actually, quite frankly, you look at some of the numbers we're seeing. You guys have done a nice job.
Thank you.
Yeah. So, you want to continue going? Are we done with revenue?
I think we're done with revenue. Any more questions on revenue? Or on expense?
Let's go to page 302, 303 on expenses. We're down about 4.4% here. You've done some shifting in staffing. Do you want to
Yes.
explain this a little bit?
Well, you recall, several years ago, we started, basically from this commission, trying to reduce our overheads and things of that nature. We originally started looking at outsourcing, but after meeting with several companies and several large companies and small companies, their savings were in the employees and their benefits, et cetera. We were talking about going that way, but there was really no savings to the town overall because we have a no layoff program. So what we did was come up with the idea of transferring 2 people down to DPW where they could be utilized, okay? And we can utilize, because obviously we can do it with seasonal staff, the majority of the work during the summer. And so we reduced it by 2. That happened last year, and it's been quite successful. You'll notice an increase in the one seasonal payroll line, and it's an increase this year, but it used to be up there several years ago. But we weren't fulfilling it because we didn't need the funds, and we dropped it down to the number of people we had. Now we're back up to where we should be with the number of seasonals to offset, the two people that we lost. And then the other area that, I guess, and then we did increase this year, our capital.
Okay. Any other questions? Any questions on this budget?
Can I just ask a question?
Yeah, please, Mr.
The
Walsh.
golf carts, they're on a lease?
Yes.
That was like a 3-year lease or 4-year lease?
I just looked at it. We have 2 years. I'm sure there'll become I'm sure probably this year or the end of this year, they may be, as they usually do, we try to flip it in the 4th year or the 5th year. But it is a 4-year or 5-year lease, excuse me.
Okay. All right.
Any others? All right, I want to,
We going through capital?
who?
or just looking
Go
at
ahead, Mr.
capital?
Hoffman.
So we're almost to the end of Parks and Rec, right?
Yes.
I just have a question. I noticed that the revenues for your department are all listed in the early pages, 4950, and then your expenses come in 290-something to about 300, 305. Is there any place that lists the total gross revenues less total expenses for your entire department?
Yeah, you should have it.
There's a handout here, Mr. Hopkins. I was going to actually go to that after.
Oh, I'm sorry.
Oh, no problem.
Okay.
I do want to go to capital. Can we come back to this?
Sure, go ahead.
Thank you. Can we, and thank you, Mr. DeWitt. Can we go to capital for the golf course? Just separate, it's within the operating budget, but it's a separate line item within the operating budget. Go right ahead, just walk us down these 3 items, please.
Well, I'll do the first. Well, we're asking for replacing of the driving range netting. It's really just torn. We're losing, balls, so it needs to be replaced. Peter needs, the maintenance crew needs a carry-all maintenance vehicle replacement for $11,000. And this grinder, we were going to have it last year. I asked to have it taken out prior to coming here. We're in the process right now of filling one of the vacancies. We have a mechanic vacancy, which we'll hopefully fill next week. And at that time, we're going to be putting in this new grinder that does all the mower blades, et cetera. But it's also safer from an OSHA perspective. It's fully enclosed. Right now, it's just a grinding wheel. And it'll allow this individual to do more than one job at a time. You can set it and forget it, so to speak, and then go and change some oil on another machine. So we waited until we had a retirement, and we were going to fill the position and move forward. So we hope you'll be supportive of it.
Any questions on capital items related to Smith Richardson?
That vehicle, you have 2 that are down? This, it says it's
Unusable.
replacing, that are unusable?
Right.
Okay, so you only need 1 because your staff numbers are going down a little bit too, right? Because of the 2 left.
Well, we're going to be we felt we could get through with 1 this year. and
Okay.
Maybe come next year for
Okay.
another one.
Okay.
We
so
just
then-
wanted to let you know that
Okay.
another one will be coming.
Will be
It's on
coming.
our,
Okay.
it's on Peter's replacement schedule.
Okay.
Okay. Any other? All right, seeing none, that does bring us to the end of the overall Parks and Recs. And then I do want to turn to this schedule, which is something that Mr. Lombardo has provided to us annually for the last several years, which is the, Mr. Hopkins, as you referred to, the consolidation of the income and expenses for each of the sections. If we want to take a flip through this.
It's kind of what we call the profit and loss statement for
Exactly.
each of the programs.
Exactly. And if you look, the summary of all the budgets, which is several pages back, shows you, and this is interesting because we kind of get asked this, right? Or at least I get asked this around town. Park and recreation, how much do we spend on it, all this. And when you put it all together, it's a bit above break even on an annual basis. Kind of pays for itself. Why are we in the golf business? Why are we doing this? And that's one of the reasons that you started preparing this. I just want to confirm, this is done in concert with the finance department. This
Yes.
isn't the
The numbers-
back of the envelope.
Right. No, the numbers are, past year's revenues, past year's expenses. As you know, the last 2 columns, 16 and 17, are estimates. obviously, but, and then the prior years are the actuals. We go back and make sure that the numbers are what they are. As this board had asked, we do show our bonding cost, okay, and our unemployment cost.
Yep.
To help offset, what our actual operations might be. And I broke it down, summary of all budgets, just summary of Penfield Waterfront and Parks and Rec, and also a summary of Smith, just golf itself.
So what's interesting, and I just want to point it out because it's always a bee in several of our bonnets every year for our newer members that might not have looked at it in this way before. And I never realized this until a few years ago. We actually, at the golf courses, at the end of the season, when you let people go for the winter months, we actually have to pay them by law unemployment compensation. So they work a season, they know pretty much they're going to get hired back the next season, right? But during that period when they're not working, we actually incur unemployment costs for those individuals. So that's why we asked several years ago when we started looking at this, that the costs related to that be attributed in the profit and loss statement so you get a fuller picture, right?
Correct, yes.
Very similar to a discussion we had about the Board of Education.
Yeah, let's remove it to
From
the
a
Board of
pro forma
Education
side.
budget.
Right, exactly.
Gerald Lombardo Golf School?
Right. I think we want to start the Fairfield Golf School. We're going to move them to the Board of
As
Education.
soon as Sacred Heart moves over.
Like Sacred Heart's
Exactly.
like,
Does anybody have any questions about that? That was interesting. I mean, that's something that came up a few years ago, which was pretty surprising. Anybody? Does anybody have any questions on these schedules? No, it's good. Cool. Gentlemen, thank you. Thanks
Thank
for
you.
coming out
Thank
tonight.
you. Night.
Thank you, Jerry. Thank you, Peter.
And again, congratulations on your award.
Yep.
Thank you.
All right, that brings us to the end of our regularly scheduled program this evening. Does anybody have any questions, comments, concerns on the budget process so far? Anything they want to talk about, communications they want to discuss? All right, seeing none, we're back at it on Tuesday evening.
Here, yeah.
Yeah, we are here.
Oh, it's Board of Ed?
It is the Board of Ed night, that night. So thanks, everybody. Can I have a motion to adjourn? Mr. DeWitt, seconded by Mr. Walsh. All in favor? Those opposed? Abstentions? Good night, everybody. Thank you.